Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three stocks, three charts, three trades. And Kevin Green will take us through the charts. Here to take us through the trades, Aquiles Larrea, founder and CEO of Larrea Wealth Management. I'm glad to see you both. Aquiles, before we start our picks and going through the charts, I first need your reaction, because last night as I was going to bed, and I always check, it was like, whoa, and that tacks on from last week. What did you make of the action when you were going to bed and you saw futures were down and you saw selling across, right? We just talked about the Nikkei down 12.5%. And we see our major averages down 3%, 4%. Some of your thoughts this morning?
Yeah, you have to remember in the S&P and a lot of indices, we've been up over 20 to 30%, and we haven't had a significant correction in any of those numbers. So I believe that this is a normal correction going back, taking some profits for some people. Some people are also using this as an excuse to get in there and buy some high quality stocks, which I highly recommend at this time at a cheaper price. So if you think about it, there's a lot of opportunity here. It is not for the timid, and it depends on which sectors you're willing to get in and go in at this time. Be strategic.
Really interesting to hear your conviction to the market. On Friday, we announced that the NASDAQ had in fact gone into correction territory, down off 10% or more off the 52-week highs. At that time, it was down about 11%. We see it down another 3% or so today. That being said, when you say it's also a time, so we haven't seen corrections, we needed a pullback, it was overbought, that type of strategy, right? So then you said get in and buy some of the things that you like. Does that mean that you don't think we'll go down further, or you buy some here and then if we drop further, you buy some more?
You know me, Nicole. I'm not afraid to go and buy now, and then later on, should it go down a little bit more, yeah, we'll go get some more. The reason for this is that when you're putting together a high quality portfolio like we're doing for our clients, we want to make sure that we're getting in at a couple of entry points that whether, it's part of a consolidation or whether it's just, the big question now that people are asking themselves, is this the sign of a recession? Are we going into a hard landing, or is this just the pull back towards a softer landing, but a little more dramatic, should I say, in that sense? And the question, it depends. I really believe that we're still heading towards that soft landing, but I do believe that the Fed is going to have to act sooner rather than later. I think they're going to be looking at a 50 basis point move versus the 25 basis point.
Will they do that before September?
No,
so
I don't see that happening.
I think they'll wait until September?
Yeah,
I remember being on the steps of Federal Hall when we had an emergency cut many years ago in between meetings, and there's sort of this oh my goodness moment, and it's not. People sometimes like when rates come down a bit, their credit card rates are left to rest, or mortgage rates, but when it comes like that so dramatically, it says, oh, the economy is going to spin into recession or depression, or and then you feel like if they're doing these emergency moves, or sort of doing the trajectory, if it's going to be 50 basis points instead of 25 basis points, does that mean they are worried about a recession?
I think they are, and I also think they're worried about the strength of unemployment, how that's been going up as well, which is the Fed's job. They have to look at both things. They also have to say to themselves, are we going to cause this recession by not acting soon enough? I believe that that's not the case here. I think they're still going to wait. I think that September is targeted, but like you said, it has happened before where they have gone in and they have made that movement. It would not surprise me if they did it this time of year, but I really am thinking it's going to head more towards the September meeting.
All right. Well, thank you for all of your insights on the markets, the market strategy here today. The Dow is now down about 922 points off the lows of the day. It was down over 1,100 points, I think, at one point. So let's get, and Kevin Green, thank you for your patience on this one, but in a breaking news environment like today, we're going to now kick it off and look at some of the names. So the first one you have here, Aquiles Larrea, MO being the ticker symbol. Tell us a little bit about this story quickly.
Yeah, very quickly. Altria is one of these these companies that shows a lot of resistance during these times. Whenever there's a flight to quality, you're going to see people heading into Altria. They're going to go into utilities. They're going to go into, whatever perceived safe haven there is. And we believe Altria is one of those companies. We expect a lot of near-term volatility, but not as much as you're seeing with the tech sector, not as much as you're seeing with value stocks. Altria, yeah, it's down about $1, $1.50 or so right now, but you're not going to see it go down to $10 that you saw with other sectors. Plus, it's got an excellent dividend. That, along with a perceived growth, we should see about 9% move to the upside in this 12 to 18-month time period.
All right, so that's actually a good move. 9% would be a nice move to the upside. Let's hear what Kevin Green has to say about the chart today. Kevin?
Well, Aquiles is a very smart trader and investor, so he's definitely looking at these charts as well as the fundamentals. And you can actually make a case from a technical standpoint that that price target could be on deck here in the near term. Nicole, if you're kind of looking at this chart on a one-year daily basis, we had a situation last year where we had this downward reaction. We actually had a little bit of a consolidation pattern at point A, and we had the 200-day moving average, which is in red, as an area of resistance. We broke through that in around March of this year, came back, tested it, and now we have been in this bullish channel, this ascending channel, and it's been respecting not only just the downside level, but also the upside level. And right now we're trading at the upside. And so could we see an immediate pullback, especially with the equity market selling off here right now? That could be in the cards. But once again, looking at this bullish structure here, it's something that really, it's going to be very hard to really try to fade. If you were, you could look at a support area at around $47.50. That would be your first area of support. And then the next one would be the 200-day moving average, $43.17. The only thing that does cause me a little bit of concern is the RSI, which is going to be in point C. We are seeing that hinge a little bit lower, making lower highs and making lower lows. So that is actually bearish in nature in the near term. And the MACD does appear like it does want to cross, even though it is still in expansionary territory above that zero line. Just be mindful of that cross. That could also just indicate a near-term pullback, as the broader equity market is doing right now. But he is right, from a seasonal standpoint, this tends to outperform when we do have economic headwinds or any type of recessionary fears in the market.
All right, so we'll watch for some of those indicators that you mentioned, right? The RSI, MACD, those kinds of things. Next up you have Con Ed, is another name that I believe you like and has some potential. Tell us a little bit about this story.
Yeah, Con Ed's one of these companies that first off, New York City just gave them a big raise, right? I believe it was around $70 per person. Secondly, they have been raising their rates constantly over the years, and that has bode well for the investors in this particular stock. It has a nice dividend yields, close to 3.8% or 4% at this particular time. We also believe that there is significant growth should the stocks start to move in that direction where we're seeing more sell-off. This is a perceived flight to quality type stock, as are other utilities, and people will want to get into this. Also, this is a high quality stock as a whole, and we could see a move towards the upside of 6 to 7% in an 18-month time period, which doesn't sound like a heck of a lot right now, but with what's going on, it could be a welcome refuge.
Right, and you talked about, picking up some stocks, using buying opportunities as we're seeing pullbacks across the board with the S&P at 52.17. How far do you think the S&P can go down? I mean, are you worried? When will you be worried? When it breaks below something, or?
I'm more worried right now if not the quality of the stocks or the as a whole goes down. I'm more worried if the Fed is not actively engaged by September and moving in that direction
so a lot
to take
weighing
rates
on the
down.
Fed. A lot weighing on the Fed. Let's see, Kevin, take a look at the charts where it's at 101 Con Ed today. He thinks it has a 6 to 8% potential to the upside and somewhat of a safe haven. Some of your thoughts on the charts, Kevin.
Yeah, and rightfully so. We are actually seeing the stock break out here. Actually, Nicole, if you're looking at a 3-year weekly, we are actually our one-year daily chart here. You're actually seeing a consolidation pattern since pretty much last year, September of last year, and breaking out in the middle of July here, trading between $87 and $92.85. But now we did see that breakout to the upside. The 20-day moving average crossed above the 200-day moving average, which is bullish. Once again, you have that very strong uptrend, making new relative highs. And we have the RSI, which is at point C, Fibonacci, which is still at elevated levels, but once again, it's just showing the fact and the resiliency of this bull move here. And if we can continue to see volume stepping in, the price action can continue. We also have MACD, which did cross in a positive manner in the middle of July. 12 EMA above the 26 EMA, above the zero line. Ultimately, that is bullish as well. So, yeah, if you're going to see positive flows going into utilities, this is a name that's really reflecting that breakout and that price target that he's talking about here, or the price action move is realistic.
All right. And thank you for that one. And last up, we have one more here on the big three, and we're taking a look at Raytheon. Some of your thoughts there, Achilles.
Yeah, if you're looking at a stock that's going to weather this storm, Raytheon's one of the best. And the reason being is we have a lot of conflict going on in the Middle East. Raytheon directly benefits from that, have benefited from that, over 30% year to date in terms of performance. They have a sizable dividend. But more importantly, we feel that there's still room to run for this stock, as if the conflict grows bigger in the Middle East, they will be one of the direct beneficiaries of that. And we feel that that is the case at this particular point, that we could see anywhere between 10 to 12% in a 12-month time period. It's a great stock to own quality-wise, and we think strategically buying on the dips, this is the time to get in.
All right. All right, Achilles, let's see what Kevin has to say here. Kevin?
Yeah, so the stock has been trading in a range-bound action pretty much for the last 8 months, 9 months here, Nicole, trading at the lower end of the range at $80.75, the upper end at $104. We briefly did break through that level to the downside in October of last year, but quickly recovered. And so what I did is I actually put a Fibonacci retracement and an extension on this chart from that 104 level, which has been an area of resistance, down to that low of $68.56, which would bring you to $126.34 if you're looking at the 161.8% extension, which a lot of technicians do look for. And so that would also complement the price action move that Achilles is talking about. Just be mindful, the RSI is making lower highs, and we do have actually a bearish divergence. That could be an early indication of a near-term pullback when it comes to price. And the MACD is still bullish with the 12 EMA above the 26, above the zero line here. So if you're looking at it price action wise, Fibonacci retracement and extension wise, overall it is bullish, but we may have a small near-term pullback in price action over the next week or 2 weeks.
All right. Thank you so much, Kevin Green. Also, Kevin and everybody, this is Achilles' new book that he brought to us today, Wise Up with Your Money. And it's about financial literacy, financial discipline, and we congratulate you, Achilles, on your, you've been an author before, but congratulations on your latest book, so people have the opportunity to get that. Aquiles Larrea of Larrea Wealth Management, and our own Kevin Green there on the charts. Thank you both for the big three today.
Man, it's wild. No, back before I moved to Montana, I worked in the emergency room in Pensacola, Florida, and you would see so many people that if they get caught with the drugs or something, they would swallow their dime bags or something just to try and get away from it. And it was just like, that doesn't do you any good. No, that does you no good at all. And the funniest or most infamous story, if you want to call it that, this dude, he did that. He swallowed a dime bag. And then, of course, immediately what you do is that you pretend like that you faint or go into a coma or something, because then you have to go to the hospital first. Long story short, they put a catheter in this dude.
Oh, God.
And because a lot of times that's enough to wake a guy up. You'll start showing some life. This guy took it like this dude took it like a trumper, did not move, didn't flinch. I could not have done that. Just saying. Well, long story short, catheters are held in because there's a balloon at the end that expands at your bladder. Well, this dude obviously didn't know that.
I hope this is something I never have to experience personally.
So he was laying down in the trauma room. Like 3 hours later, he gets up and runs with this catheter still in him, with predictable results when that balloon ripped out. It was a hellacious mess. That was Yes, every man
Oh,
watching
my
this stream
God.
right now can
Oh.
imagine what happened. He will
Yeah,
never
my
have
my
kids.
balls are crawling back up inside. Oh my
Yes.
God.
So Achilles, this is the
Oh.
kind of high-end content that you're coming to today.
See,
Welcome.
this is what I have to follow,
All right,
fellas.
100%. 100%.
Keep it classy. Keep it classy.
Let's bring in
Always.
Aquiles. Aquiles Larrea Jr. is the founder and CEO
How am I
of Larrea
supposed to
Wealth
follow
Management in
this?
New York City.
I have no idea.
Oh, we have no doubt you can do that.
You're a man of
We
many
can
talents.
I'll
You can
tell
do
our
this.
personal growth stories. Yeah. So he's a personal CFO to Latino executives and entrepreneurs with over $1 million portfolios, a St. John's University graduate. And I don't know if this is true. I found this on AI. 3rd degree black belt. Is that true?
I'm 5th now. I was supposed to be going,
Okay.
but
remind me never to cause you offense.
I've been remiss in my practicing, so I can't even say I'm a karate guy as much anymore. I practice outside in the mornings and do roughly 20 minutes of work, but aside from that, it's I can't even get to the dojo nowadays. It's because I'm so busy with business and what have you.
Well, it's a good problem to have, but yeah, still, that's extremely impressive. I mean, yeah, I can't even imagine. So congratulations on that. Maybe you'll get back to
Thank
it.
you.
If the economy tanks next year, you'll have maybe more time on your hands.
I'm busier when it's worse.
Oh, I bet. You get a lot of nervous calls from clients, right?
Not a lot, but new clients and prospective clients definitely reach out to you because they've been on the fence for a while or what have you, and they want to talk to an expert or they want to talk to someone who's out there, who's in the trenches.
Gotcha. Well, let's talk about Donald Trump's. This was Robbie's idea to do this topic, and I really like it. The idea is that Donald Trump has promised to reindustrialize the Rust Belt, where I'm from. I grew up in Dayton, Ohio. It was well into a 6-figure population when I grew up there. Headquarters of regional banks, factories. NCR was headquartered there. Defense Electronics Supply Corporation, Delco Moraine. Every S5 and S10 pickup truck in the world was made in Dayton or in Moraine, Ohio, just outside Dayton. And today, Dayton is a shell of what it used to be. And then that's a very typical problem. And, I would say it's a large part of the reason that Donald Trump is president of the United States, is he was able to go to places like Dayton, where he went often, and look out the window of his car and think, man, this must suck to live here. And people felt seen, and they voted for him. And so he's talking about he talked about bringing coal back. There's really apparently not much appetite for that for a variety of reasons. But he is now talking about reindustrializing the Rust Belt, and also this move with tariffs and tax cuts and deregulation, not to mention the attempt to revive the steel industry, appears to be tied in with this goal that he stated that he wants to revive, of all things, the shipbuilding industry in the United States, which has been long gone and we thought we'd never see again. So, we wanted to ask you, sort of about the pros and cons of this. I mean, Donald Trump, he says a lot of things that he doesn't seem to care much about. And then other things he cares deeply about. And, it's like, so, I can immediately see, the pros and cons. When I was a kid, and I would go, and I was growing up in Dayton, I developed asthma because the air was so bad from those factories. I remember the Cuyahoga River in Cleveland catching fire, which basically inaugurated the modern environmental movement. And when in the 1980s, so many companies went out of business in Ohio and Michigan that they stopped dumping toxins into Lake Erie. Lake Erie, which had been declared biologically dead by the EPA, there weren't even microbes, came back. Now you can catch big fish there. Nature has revived. So I can see, I could see the I want the jobs back. I want the banks back. I want my former neighbors to be able to afford to send their kids to college again. But I also don't know if I want like, an AQI of 290 every day like I used to have, and and everybody growing up with asthma, and and all the fish in Lake Erie dying again. So I don't know. I just wanted to get into it with you and see, what do you think about this?
I think it's very interesting. He says a lot of things, but the truth of the matter is the devil's in the details. You're going to bring back coal, not a great idea. Will pollute even more the environment. And honestly, the thinking in my head is, what are we back in 50, 60 years ago? I don't understand
Mm,
this mentality. I think that there are plenty of other industries that could be brought to bear in an area like Dayton and the surrounding areas where you could make just as much, if not more, money. Now, you don't have to be a rocket scientist, to have, say, whether it be call centers, whether it be AI data storage,
mhm.
things that just make sense in the here and now. We have not had steel in this country. I mean, what was the last? Pittsburgh still has one uh, thing left, one of those factories left.
U.S.
We haven't
Steel, that's the
had
last
that.
one.
Yeah, we haven't had that for the longest time, and simply because it is much cheaper to produce in other countries. You can't force an industry to bring it back here unless, what are we going to do? Are we going to pay these people slave labor wages? Because that's what you would have to do to really make it work here. All right. There would have to be some sort of industrialized zone of sorts to get away with this. But if you think about it, we're also inviting back not only environmental disasters. I mean, you talk about Lake Erie. I mean, you could talk about several areas that were declared. The whole reason why we have super funds was
Mhm.
because this kept happening again and again throughout the country because there was no corporate responsibility. All right. The corporations were getting away with it. They're still getting away with it, just as not on a larger scale as they did back in the 50s and 60s, where it was known that a lot of these things could contaminate the water. It could contaminate, your foodstuffs, food supplies. And you mentioned, your asthma. I'm guessing there were plenty of other diseases as a direct result of these corporations being there. Do you really think that that won't happen again, and maybe 3 or 4 times worse because of the amount of toxins? And before we had a certain amount, let's use the pot example for argument's sake. Let's say back in the 60s and 70s, pot had a certain amount of THC in it,
Mm.
right, which is the active ingredient. That's the stuff that gets you high. But can you imagine, the pot now has 3 to 7 times the amount. And now I'm just spitballing here, but you were talking about these companies which haven't been the most responsible of companies to come back in to let that damage happen. It would accelerate, I would say, fivefold, tenfold. And instead of ruining the environment in, say, 3 years, we're talking maybe one, where you're starting to see the all these adverse effects on people. And then, what are you going to do from there? Oh, I'm sorry, we knew about it, but, which was the case. Most of these companies knew, it's kind of like cigarettes. They know it was toxic.
Mhm.
They knew it caused cancer. They knew that there were plenty of adverse effects from smoking, yet they still function. And once they got you hooked, you were in there, and to the day, that is still the case. And then I don't have anything against that. If that's your thing, I'm not going to tell you, don't smoke. All right. But so long as you know the risk that you run by doing so, then that's on you. So I see these companies, I see, shipbuilding, that's super interesting to me. I was like, Okay, so we're going to build a shipyard here, in Dayton, for argument's sake, and
Well,
we're
it
going to
won't
bring
be in
that.
Dayton. It'll be in Baltimore, let's say,
Right.
right?
Okay, let's say
Or
Baltimore
Norfolk.
for. All right. Where traditionally those industries were housed, if I remember correctly. And you're going to build your ships there, but how much are you going to pay these people? If we go do it somewhere else in the world, we can get it for a third of the price.
Well, I
That
think the
is
argument
still the
would be,
case.
and
There's the,
I can really argue this both ways as I set it up, right? But I mean, I think the argument in favor would be to say, maybe we don't have to pay slave wages to make this work. I mean, you're talking about stuff that is intrinsically very, very heavy and expensive to transport. Steel, all the stuff that goes into shipbuilding. So if you made steel here, and you hire American workers to make the steel, you hire American workers to truck the steel or railroad it, through intermodal transport to shipbuilding facilities. I mean, it seems to me like it could be, it could be. You wouldn't necessarily have to pay, low wages because there's economies to be made because it's already here, right? I mean, so I don't know. I can see
it
how it could
hasn't been
work.
here for a very long time, and I don't see how economically this is going to be a viable thing.
Mhm.
You're talking about major components for a huge endeavor. Yeah, I get
Yeah.
that we could conceivably do it here. I don't think it would be to the company, whoever's manufacturing it, it's not going to be to their benefit because really, how much are they going to get back as far as their investment is concerned?
It
You
does feel
know,
very 20th century, right? It's like,
it,
instead of like going with the way things are and adapting to that, it's like,
yeah.
let's go back to the way things were.
Ted, look at China right now, right? China is no longer the big boy when it comes to the clothing, the industrial industries. That's happening now. That's going to Mexico right now. It's cheaper to produce those goods there. So, and then on top of that, China has a huge problem that there's not going to be enough of a population to fund the retirements of the elderly in that country. you know, Everybody went through World War II. And if we look at just the population segments of the elderly, you would need 2 to 3 more times population in order to fund that pension scheme
Mhm.
going forward, and they just don't have it. Real estate, another area in China that just can't be supported by the numbers out there right now. We see a little of that here, but I'm not sure. To me, this is just sounding a little bit more like a gimmick, another Trump gimmick. This doesn't. I don't care what you think of the guy. I think you got to have ideas, of course, but I think these are not the ones that will carry us in to the next century, which is what I
Here's
believe that he should be doing.
here's the view from Middle America where I am. I'm in the part of the country that everyone always forgets. The tone on the street here, and I guarantee you this is going to be the same whether you're in Montana or in Ohio or Kentucky or Illinois. Pick your flyover state. The tone on the street here is that inflation goes up 2 to 4% every year. Our wages are shrinking because the wages aren't keeping up. So then it becomes a struggle. You can forget about buying a car. You can forget about ever buying a house. It's never going to happen. I will never own a home. That's just it is impossible unless something just drastically changes. It's never going to happen for me. And there's millions of people who are like that. And so they see, all the talk going on about this 21st century economy. But the problem is that the American middle class is being destroyed in the process by it. At least that's how it feels. Like, right now, my wife and I, we're going over looking at our budgets. Like, okay, so with the price of food, rent goes up every year. I simply do not care about what the economy is going to look like 10 years from now. I care about right now, where that's Trump's powers. Like, I hear you, I see you. Wall Street has forgotten you. the political class, Republican and Democrat alike, not only do they not listen to you, they actively hate you. That's the feeling on the street. And so whenever Trump comes out and says, I'm going to rack up these tariffs to make it so much more expensive for companies to outsource those jobs, or like to your point, to foreign workers because it's cheaper. That way I can bring these industries back and start bringing high paying jobs where you could actually, I don't know, buy a car or be able to invest in the stock market or be able to actually start building a life. And so, like to Ted's point about the environment, I'm in Montana. It's beautiful here. You can't eat the scenery. And so that's what people are looking at. It's like on the Crow Indian Reservation. When the coal mine there got shut down, the unemployment rate there is about 80% now. It's insane. And so people in the middle of the country, like we hear what the analysts are saying, we don't care because we cannot afford to live. And if Trump is able to deliver on some of this stuff, I promise both of you is that Trump will win the midterms and his MAGA faction, love it or hate it, will become a force that cannot be stopped because Trump will capture that working class anger and build on it. Where am I going wrong on this?
I don't think you're going wrong on any of this. You see it firsthand. I see it here in New York City. I mean, the have and have nots, there's a big disparity that will continue to grow. And you know who the biggest culprit in this? Corporations, because wage stagflation is at all-time highs. We've seen that they are not keeping up. They're showing it's a mixed message because you're seeing they're showing record profits. They're paying their CEOs X amount of money, and this in turn is showing middle America that, like you said, the companies, we don't care about you. Wall Street doesn't care about you. You know, the answer is not easy. The answer begins on the grassroots level, in my opinion, from the local congressperson there. You know, I'll give you an example. In New York City, you have congressmen here who are still going out to the food banks here, who are still in touch with the people, you know, like her or not, AOC, right? She is in Elmhurst, Queens. She is in Queens in general and the Bronx all the time. She does not sit from a perch in Washington, D.C. Anytime the Republicans have tried to knock her out of the race, she has destroyed them by usually 80 to 90% versus their candidate. All right. Why? Because she understands, and she talked about it a little bit. I saw on social media the other day, she was talking about this thing where if your prices keep going up, and that with the tariffs, to me, make this move on the tariff unconscionable. It doesn't make sense to me. All right. We are not, this country was built on tariffs. If you think about it, back in the 1800s, the 1700s, there was no IRS at the time. But at the same time, we are not in the same world. You would be dragging us back 100 years to a place where kids were still working, all right, 9 to 5 or 12 hours in the factory, severed hands, fires occurring in factories with no payments going out to families. Do you really want to go back to that? I think people love the idea, hey, put me to work, put my kids to work or whatever, whatever it needs to do. But if a company came out, to middle America, there's going to be a lot more concessions. What they should be doing there is creating special tax zones for these companies and a living wage that everybody can be proud to have. But how do you do that? Like I said, you create a special tax zone, you create a special industrial zone that benefits the companies, but in turn, you got to have an agreement and say, hey, we're giving you all these breaks, we're giving you all these things, but you have to hire local people, for X percentage of your workforce. I mean, I don't want to see people coming in from New York.
And
I
X
don't want to see
number of them.
Correct.
And you have to stay open for X amount of time.
If I
correct.
lived
You just can't up and leave.
These Reagan, I think it was, who started these enterprise zones, and they didn't work because they didn't really hold the company's feet to the fire.
Right. There was no accountability with those companies. Absolutely. I thought it was a good idea in theory, but without holding these companies accountable, you say to the company, hey, we're going to, we expect you to hire X amount of people in this amount of time. And if you don't do it, guess what? One segment of your tax, or we're going to increase your taxes by the percentage that we agreed upon. Once again, the devil's in the details. I think this might be more effective than just saying we're going to bring all these industries back. And, if you look at like the car industry going back and forth, they go back and forth from both Mexico and Canada, for the parts and the like that are made in this free trade zone we used to have. Now no longer, because we're looking for someone to blame so we can get more tax cuts for the rich. Let's call it what it is. All right. So in my opinion, the only way to fix that is everybody sit down. At the end of the day, this is about money.
Sure.
Sit down. Let's talk about it. Let's create a special agreement between Mexico, the United States, and Canada that everybody benefits. So that way, middle Canada benefits. Blue collar workers benefit more than anything. You know what? Blue collar built this country and built many countries. You having good people who work and earn a decent wage, a living wage, is the way out of this, in my opinion.
I agree, and I think this is about money, but I think more than that, Achilles. I think in this case, it's more about stability, because there's so many people who are giving up on voting. They're giving up on the system. They're completely unplugged, and all they feel is despair, and then that despair then becomes anger. And if someone's listening, Angie Wong, I know you're watching right now. If you want to unseat AOC in New York City, I can tell you how, and I can answer your question also about tariffs. AOC going to the to the Bronx and stuff, doing her little photo ops is great. But you want to know how you take her out? This is how you take her out, Angie. Listen to me. If you want to win that seat in New York, you go there and say, instead of you being here in this food line, how about if we bring these apparel companies there in Mexico because of the tariffs? Let's raise the tariffs. Let's make it more affordable for these companies to be here and start building apparel factories here in the Bronx again. Let's bring jobs here. That way you don't have to be in
what you're talking about has already been happening. The last Bronx borough manager, and you have to live here to really know the situation, what's going on here. So no offense to you, but
no, I don't know.
We're not talking about AOC just doing that. We're talking about there is a concerted effort in the Bronx by the borough manager, by
President.
the head of the borough there.
Ferrer, right?
I don't know at this point.
Yeah, because you two are neighbors, ain't you? Y'all both live in New York City.
Yeah,
well, yeah, New York City is 5 boroughs. Everybody forgets there's 5 boroughs here, 5 counties, and we all work together. I mean, we try to work together for the same goals, which is to have that living wage, to have that quality of life. You know what? What really has taken off here? Technology. There are spaces for technology, where the big corporations. I mean, at one point we had to talk Google coming in at one point, and that fizzled out because they didn't want to play by the rules. They did not want to be accountable to New York City. And, basically we said, no, absolutely not.
AOC told Amazon to go to hell too in Queens. And and this might break people's brains outside of New York City, but that was a popular decision on her part. New Yorkers were like, yeah, bye Amazon, see ya. Because these were subpar wages.
Not only were they subpar, but you have to remember, New York is one of the most, in comparison, I think only Los Angeles compares, but New York is one of the, if not the most expensive places to live. So you cannot get away with coming here and deciding, hey, we're going to pay a subpar wage
Yeah.
and get
Well,
away
here's your
with it. It's
$12
not
an
going to
hour.
happen. The unions say no,
Not to
and the
mention
unions
Amazon
are
was going to
very
get all sorts of city. They were going to get all sorts of city tax breaks. It's like,
absolutely
why?
right.
It's like,
Exactly. You know, they have plenty of money. There's yeah, give them some breaks, of course,
Yeah.
encourage the business, but you know, to make it where economically for a family whose parents are working in these shops, not the right
well, what
decision.
works for New York is what not doesn't necessarily work in Montana, right? I mean,
Correct.
New York has a highly educated workforce. It's high population density, very expensive real estate, so it doesn't
Huge
make a lot of
tax
sense.
base.
Right. So it doesn't make a lot of sense for us to have, big factories, employing people who don't need a college degree to do those jobs or to get hired to do those jobs. It's true that for us, AI and programming and all that, coding, and getting people who, are all living close to one another and doing knowledge-based stuff makes more sense because we all live next, New York City's a big city, but it's vertical and nothing's really that far from each other. You could be, the furthest part of the Bronx to the furthest part of Manhattan by subway is maybe an hour and 15 minutes. It's not that bad, and it could be faster sometimes. So it's like we're interconnected in a way that other places aren't. So I think that's an important thing. Speaking of AI, I asked AI about this topic about achievability of Trump's goals. I thought you'd find this amusing. AI says modernizing infrastructure and securing funding would face political gridlock and budget constraints. The odds are 50 to 60% with bipartisan support, right? So no bipartisan support, obviously, right? I don't think. Training a workforce is feasible, 70% chance, if education aligns with demand, which these days is totally not the case, right? There's tons of people who need jobs, tons of employers who say they can't find people to fill the positions that they need because they don't have the right educations. And supply chain retooling is tougher, 40 to 50%, given global competition and cost. Government commitment via defense spending, which Trump is going to cut, and or protectionist policies could push success to 60 to 70%, but sustained effort over decades is key. And that's when I started laughing. America doesn't do sustained effort over months, much less decades.
Let me ask Robbie a question. Robbie,
Sure.
let's just say for argument's sake, I'm a big company. I come into Montana where you are,
Okay.
and I say, okay, for the most part, we're going to give you paid training,
Right.
but it's going to be a third of what you would normally make, right? But you really need to know how to operate the next phase of this evolution that's going to occur here,
Sure.
but by the end of it, your wage is going to be, let's just say the median wage there is 40,000, right?
Yep.
They say by the time we're done, you should be at 35 to 38, 35 to 40, as far as the band is concerned, that wage band,
Okay.
or higher. All right.
Sure.
Would you welcome that? Would you sit
100%.
down, do the training, go through it? It might take 6 months to a year. I know that most people would,
Yeah.
but the question is, would we hold the company accountable for that training? Because training costs them money. They're
Sure.
going to, any big business that moves into an area, they lose months.
Sure.
I want to say 8 months or a year easily. They lose money for that entire period until everything is up and going. And I think that is really the way in middle America to make people interested. I don't think that this idea of going back and, I know that some people will just take any job, but at this
Right now, here,
particular
it's all about
point,
just surviving. It's
yeah,
all about just surviving right now. Forget
right.
about the job that you want to have. It's literally, here, Achilles, and I'm sure, I speak for probably 90% of middle America right now.
It's here too.
It's all about
Yeah.
just simply surviving. It's about just being able to pay the rent, and then decide what bill am I going to be late on this month so I can get groceries for my kids. I mean, that is the reality.
Absolutely. And when you are thinking that way, pardon me for saying this, your mind cannot think of bigger things.
Of course.
And that is the perfect way that companies, corporations keep a certain percentage of the population down. Right?
Yep.
It is exactly their program, whether conscious or not. This is the way they keep people below middle class, and that they can control people more so who are at that level, because you cannot think big if you can't make your rent, if you can't buy your kids things. Absolutely not. So we have to find something that gets them on the road to, okay, like I mentioned, the training's going to start here.
Sure.
We're going to pay 80% of what your wage is going to be. Then it goes up. The longer you're in there, the higher it goes up. So let's say 6 months from now, you get a pay increase. 6 months after, you get, and then all of a sudden you're at 100%. So the next thing you know, instead of 40,000, you're closer to 50,000.
Do you want me to tell you why that would never happen?
Please.
H-1B visas. It is cheaper for companies, and this is one of the reasons why people on the right, like me, absolutely hate them. And I'm sure there's a lot of bleed over on the left too, because there is no incentive for companies like what you're talking about to come in and start training people, investing in that human capital, build that workforce domestically. If you can hire a foreigner that already is trained for 60%, and they're already able to bring that full load in. So that's the daylight between me and Trump. Like, I'm a MAGA conservative. I'm not a Republican. I hate the Republican Party. I despise them because, I mean, they made it very clear they're not for me. But the split that you see on the right is between what you just talked about, investing in the American population, versus the country club Republicans who want to bring in foreign serfs, let's call them what it is, H-1B visa holders, to depress those wages. And that's what I'm saying. What Trump is doing now, he's pushing for stability. I think that if he's able to win the working class and say, listen, I'm fighting for you, and these asshole Republicans and Democrats are the ones who are actively screwing you, they're voting against what I'm trying to do, he will win the midterms. And to borrow a Trumpism, he will win bigly, because this is about building
I don't disagree. I don't disagree. I think when you appeal to a large segment of the population that's suffering, that's going through this, and that the corporations are not on board with, like you said, having these visas,
well, they're incentivized not to,
redacted, and the like. But here's the thing: at some point, we have to get on board with getting some people aboard.
I agree.
Domestically. And
things
the
are going to
question
explode.
now goes back to the corporations. Are they willing to go and do this?
Yeah, either that or they're going to deal with political instability that's going to hurt their bottom line in a major way. We're going to have to leave that there, Aquiles, but thank you so much for joining us. Always a pleasure to see you. Aquiles Larrea Jr. is the founder and CEO of Larrea Wealth Management here in New York City. Since 2002, he's been a personal CFO to Latino executives and entrepreneurs with $1 million plus portfolios, a graduate of St. John's University, and a 5th degree black belt. He's a frequent media contributor on wealth strategies.
Let me throw something out real quick. Ted, real quick. Okay. I'm reading Achilles' book, Wise Up With Your Money. So I'm reading 2 books right now. I'm reading Ted's book. It's not out yet, and I'm reading his. And if you are interested at all in finance and trying to figure out just how to make your dollar stretch a little bit, I'm telling y'all, buy his book. It's on Amazon. Great read. I am not paid by him to push his book. I'm just telling you, it's a damn good book. Go buy it.
I appreciate that.
All right. And with that, talk to you soon, and have a great day, Aquiles. Okay.
It's time for the big 3. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Aquiles Larrea, founder, CEO, Larrea Wealth Management. I'm so glad you're both here today. Aquiles, just maybe a big picture here as we go into the rest of 2024 after the best month of the year for stocks in November.
Yeah, we could have had what we're looking at here. We could be having a slight pullback. I don't think it has any legs, though, at this point. I think we're heading straight up. We're going to keep making money at this particular point in time. If there is a correction, probably going to be in the latter half of January. Not really believing that at this point, because there are no conditions showing that we're going to go into any serious correction at this point. But anything can happen. We're seeing a little bit of a pullback today. But overall, the market's positive, positive, positive. Earnings are decent. Margins are good. We just have to see how it goes from here.
All right. First up, you have FedEx here today. What a choppy chart this is over 12 months, though it's been on a recent upswing, let's say since September. Some of your thoughts on where this could be headed and why? It's at 296 today.
Yeah, we think that this is a conservative play. I mean, we've seen it go higher, looking for it to go up about 9% in a 12-month period. We usually say 12 to 18 months, but I think it's going to happen sooner with FedEx. We also see excellent management, good operating margins. We also think that we're going to continue to the upside. The sector's favorable. This is their time of year, if you think about it. Christmas is one of the busiest seasons. I worked at UPS back in the days, and let me tell you, this is as busy as it gets.
Right, this is their time, right?
Absolutely. So this is moving forward. I think that FedEx is one of the stocks that's going to really perk up in just the next 3 months.
All right, let's see what Rick Ducat has to say about the charts, please, Rick.
Well, Nicole, you said choppy. That's really a good way to describe this chart, because when we start looking at it, you can see that there's some very large, very noticeable gaps. As is often the case, most of them are around earnings here. So you can see that we had some big swings to the upside and the downside. But when you kind of look at it a different way, largely, we've stayed within the boundaries of this triangular shape here. You can see one trend line starting at the highs, one trend line starting at the lows, converging toward each other. Now, we are in a rather interesting situation because we are pretty close to breaking out of that upper level here. However, we failed at a repeated ceiling, kind of this resistance zone between our red line and our pink line, 300 to 305 or so. We have fallen below that area. We are staying within the boundaries of our blue dashed lines here, our upward sloping channel. And you can see we did kind of accelerate to the upside. We had this more narrow sloping yellow trend line has given way to this steeper blue channel that we've been in. RSI actually looking a little bit worse than price. We saw a little bit of bearish divergence here in terms of our RSI study. Now we are breaking through that green trend line here, heading toward the 50 midline that separates bullish and bearish momentum. So beware of a break below this supportive area and for RSI to break lower. Now, if we were to zoom in a little bit, we can see that the key areas here, well, like I said, our resistance zone, 300 to 305. Then our +1 standard deviation channel comes in just below 310. So nice even $5 increments to keep an eye on there. To the downside, yellow 21-day EMA, yearly linear regression line, and our green line, our support and resistance line from the past year, all come together near about 290. So that would be a support zone to watch.
Okay, great. Thank you for that chart. I mean, he's watching, obviously, resistance, support areas, talked about the choppiness that we discussed. Final quick thought. I mean, you see the upside there. Would you say the same for UPS, or you're more of a FedEx guy?
I think the sector is going to benefit overall. Yeah. This is their busiest time of year. They make a lot of money this time of year, but we also think just very quickly that this sector is positive overall with the growth in e-commerce and the like.
Okay, next up we're looking here at Apple, which is at 240, hitting new highs, 240.79, the new high here. So an exciting time for Apple. Hit that today, folks. New highs. Year to date, it's up 25%. A great performer for Apple. There's still more room to run. What's the catalyst?
Yeah, absolutely. The stock's been on a tear recently, and it took a break, and then it started moving back to the upside. This is one of those stocks that, it's a leader in its sector still. There's still a lot of new products coming out. They're starting to get into the AI area. We're looking at them to grow another 12 to 14% in the next 18 months. That is not a conservative move. That is an aggressive move. We think they're going to keep making money in that sense. We also have the holiday season upon, so we're going to see that go up as well. We believe in good profit margins, good operational team. So overall, we think that Apple has still a lot of room to run at this point.
Wow. All right. That's some positive commentary there on Apple. Rick Ducat, some of your thoughts on the charts, please.
Yeah, moving higher here. And, the chart is an interesting example, too, because when we look at it, we can see that, it seems to be a pretty good example of an ascending triangle type shape here, but with a bit of a twist. So here's our trend line going up across the lows. You can see just nicely making higher lows with each successive decline here. So kind of just, trending upward. And then we also could consider our triangular shape here. Instead of one area of horizontal resistance, we kind of have a zone here. We topped out repeatedly at around our red line near 233, but we also broke through a couple times and tested an upper extreme near about 237. So like a $4 range there would be the resistance zone. Either way, though, we're breaking above it today. We're making new highs. We are pretty close to the highs of the day, so looking pretty decent so far. 240.79 is where the high point came in today so far. RSI also following suit, breaking out of this downward sloping trend line here, a longer term red trend line on the RSI, not quite at the overbought area yet, that threshold of 70. That is what the bulls would want to cross above, typically regarded as a sign of strength. So now if we were to look at our volume profile study, we can see that there's big volume here. Near about 228, 227 or so. This is a heavy trading area, which makes sense because of how long we were rather sideways in that general range here. So that's a supportive area to watch here. And there's also other things that kind of coincide with that same area here. We've got our trend line, our orange 63-day EMA, and our yellow 21-day EMA. So we could kind of broaden it out a little bit more. 225 to like 230 or so would be an area to watch. Then our resistance zone now becomes more of a support zone. Finally, +1 standard deviation channel around 256 could be an upside area to watch.
Okay, so we'll watch that on the upside. Is that an area you watch on the upside?
Always.
256
Absolutely.
plus whatever else you're watching, right?
Absolutely. I think that's conservative. I think we're going to make a lot more money than that at this particular point.
All right, so that's a conservative call, plus the opportunity to move higher. And then there's NVIDIA, the darling of NVIDIA. I read earlier that Jensen Huang was offered a CEO role back in, I think it was 2013, to be CEO of something else. Maybe it was 2013 or 2016, but didn't take it. Good thing for him. Right now, we saw the stock up 180% this year, came off the highs of 152 recently. Some of your thoughts on where this could be headed?
Yeah, I think the stock is going to probably pull back at some point, but not a serious pullback. It's along the lines where plenty of gas in the tank right now, moving right along, but maybe it hits some traffic and it stop and start, but continuing on the positive trend. This is a stock that has become not only a darling, but it's a real play here. I think that, versus of the dreams of being in another place that didn't make as much sense, everybody's kind of hopped on the bandwagon, and it's making decent money as we go along.
So you still like it?
Yeah,
right?
We're going to make probably double digit, 15 to 20% in 18 months.
Wow,
we also think that this stock is going to be, there's talk that this stock is going to hit new highs. We already see that happening, but we believe it's going to continue to happen now through January. So we may have to go back now, like I did on a few stocks this year, and say, hey, we need to revise our upward price targets.
I mean, the year, I don't think anybody would have expected this year that we saw with the new highs. Even November, that came in as the best month of the year, just finishing so strong here. Let's see the NVIDIA chart, please. Rick Ducat, what stands out to you? Because he's seeing 15 to 20% upside potential here for new highs.
Oh, sure. Well, I mean, anything could happen with a stock like this. It's such a large part of the market. It's so big and so important here. And when we do look at the chart, though, a little bit of a slowdown recently. Once again, kind of we had a ascending triangle type shape here, much like our Apple chart. Not exactly the same, but once again, kind of exhibiting more of a resistance zone here. You can see we kind of had these highs kind of between our light green and dark green lines, 130 to 135. Coincidentally, just being nice even $5 increments once again here. More recently, though, is where perhaps some cracks are starting to show, because we have our rising wedge shape between our two blue dashed lines here. We topped out around this area. Notice that we saw bearish divergence on the RSI. Price was making new closing highs around this period here, but not really following suit with the RSI. RSI was actually trending downward a little bit there. So a situation where we're losing steam in terms of momentum, not really what you want to see, but also, you know, we've had such a rally, such a run here. Nothing goes up forever. A bit of consolidation might make sense at this point here. But you can see we held the line at our support zone, which also contains our orange 63-day exponential moving average around 134 or so. Now, I'm kind of wondering, it almost looks primed for a breakout. Look here, because we held on to our green trend line. We are below the 50 midline on the RSI, but we are very close to crossing above both the 50 midline once again and that short-term downward sloping steeper red trend line, as well as our yellow 21-day EMA. So we could get a push to the upside if we start to break through those things. If we were to look at our support and resistance here, we can see our blue linear regression line, our yearly line of best fit, 148.92, so about 149, the +1 channel, +1 from that area, one standard deviation, 178.60, that could be one area to watch in the shorter term. Then we've got our support zone between 131 and 135 to keep an eye on.
Okay, thank you for that, Rick. It was great to see you in all these charts. Final thought, Achilles.
Yeah, you know, we have to remember we'll have a lot of positive wage growth happening here, low turnover when it comes to unemployment, and we're also seeing continued improvement on inflation. So we have to keep that in mind. These are all positive signals for the stocks that we own, that we should see the market continue to go up. Yes, there will be some consolidation, but at the same time, I really think we're heading into this Christmas in a rally mode, and it might pull back a little bit in January.
Yeah, you mentioned the second half of January, maybe for the most part feeling more up, more bullish today. Thank you so much, Achilles. Great to see you. Aquiles Larrea there, and Rick Ducat on the charts looking at FedEx, Apple, and NVIDIA today for the big three. Thank you both. Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Kevin Green will take us through the charts. Here to take us through the trades, Aquiles Larrea, founder, CEO at Larrea Wealth Management. Good morning to you both. Aquiles, how are you feeling about the market? I'm seeing the down arrows for the week for the S&P and Dow. I will say the NASDAQ's looking good.
Yeah, you know, I look at it right now as far as the market's concerned. We're having a little bit of a corrective phase. We're pulling back just a little bit right now, but it's nothing significant to this point. The question is, will it become a longer and interrupt the Santa rally that people are hoping for? NASDAQ's a different story. We're starting to see a lot of different stocks in the NASDAQ moving to the upside, and we're hoping for a broader rally in the NASDAQ itself.
Okay, so let's talk about the names that you have here. First up, you have Meta. Why Meta?
Well, we're looking at Meta for the AI segment there. You know, it overshadows everything, but it also has VR there, you know, in addition to what it does with Facebook. There's just such a broad range company now. And we see that being a huge move to the upside because of that diversity of income coming in, and that's going to continue on a trend for another 12 to 18 months. We're looking for a double-digit move on the upside. We think that the trend is positive behind Meta, and they're doing a lot of good things at this point. We also feel that we're going to face some downside here in around January or so, but after that point, it's going to start rising up, and we'll see some move.
Today, it's down to almost 2%, so buying opportunity today, right? Is that basically?
Hey, why not? Go get it.
Let's see what Kevin Green has to say. Kevin Green, your thoughts?
Well, Meta has had a remarkable move over the last year here, Nicole, and it continues to move to the upside. We saw earlier this year a nice consolidation channel. It was still moving to the upside, but we did have a nice little range until it actually broke out. And then that breakout had us testing actually some new highs at that $600 level, came back, had this expanding megaphone pattern to the downside, and it was able to really manage it, bounce off that $540 level before breaking higher. And now you're looking at an area of resistance of around $640. Now, could we see a little bit of a pullback? Definitely. And I would say the 20-day moving average going to be that first key area of support, sitting at around $590.40. Next area I would look for is $540, and then the 200-day moving average. Now, one thing on the bottom there, we had the RSI was actually in a bearish pattern here, but it did break out to the upside. So that gives bulls a little bit more confidence that maybe it has more juice to be able to run here. And then the MACD, 12 above the 26, which is bullish. The short-term moving average, which is in blue, is hinging a little bit, but let's see how that's going to play out. I mean, overall, once again, it's a bullish trade. Bullish chart. Yeah,
understood. I mean, look at this run up from $88. I mean, I can't believe when I'm saying it out loud, to $638. That's no joke. What kind of numbers are you looking for?
We're looking for another 12 to 18% move on the upside in 18 months.
Wow.
But before that, we're going to face some significant resistance not so long from now before we see it move back up to the upside.
All right, next up, Altria. What a run that's had from $39 up to almost $60. Some of your thoughts there.
Yeah, I agree. I think that Altria is one of these stocks. There's a lot of facets to it that people don't understand. Right now, the big thing is the pouch, the nicotine patch, should I say, that people are putting in, chewing the gum and teeth. That we're seeing significant growth in that area. We're also looking for a 9% move to the upside in a 12-month time period. If you look at the past history of this stock, just the dividend alone is 7%, in closing. So this stock, in addition to its appreciation, could do very well for investors long-term and should be part of any holding or quality portfolio going forward.
Yeah, I saw the Altria declares regular quarterly dividend of $1.02 per share. So nice move there. Let's talk about the charts, please. Kevin Green.
Yeah, for a staple company, this has definitely moved to the upside fairly aggressively here, Nicole, and rightfully so. We saw earlier this year a nice little consolidation pattern where the stock was actually coming to the downside, sitting at around $38 before getting a little bit of momentum. It broke out of that initial channel, came back, retested $40, and then it's been to the upside ever since. And in September, between September and let's say October, middle of October, we actually saw this nice little cup and handle pattern that's still kind of playing out right now. We saw a breakout. We're seeing a little bit of a retest right at around the $55 level. And for bulls, you want to see this level hold. If not, looking at $50 to be the next area of support, and then the 200-day moving average. Now, the RSI has been moving very aggressively. It's in a bearish formation right now, signaling a pullback and or compression in the market. And then the MACD has already crossed in a bearish formation, 12 below the 26 moving average. I would say more consolidation right now before a move higher, and it's really testing some of the upper limits for this stock here when it comes to valuations as well.
All right, thank you for that. Any final thoughts here?
Yeah, when we're talking about Philip Morris, you have to remember there are two components. You got the dividend, you got the appreciation. Anytime we get a big appreciation in the stock, that's just like a Christmas gift. We'll take it every single day.
All right, I'm looking at Reddit. Is this an all-time high for Reddit? I'm not sure, but it is a new recent high of $180 from $37 less than a year ago. Where do you think this could be headed?
Yeah, Reddit's one of these companies. We're initiating coverage on it. We have not been in it that long. We think it's more the risk capital side. Forget about the market capitalization of the company right now. We think that there is a lot of growth potential with the stock. We easily see double digits here in a 12-month time period. And even though we're reaching those new highs, we may see a consolidation trend for a short period of time, but then it's really establishing that before it goes back up.
All right, let's see what Kevin has to say. Kevin, the charts, please.
Yeah, this is a little bit tough because it just IPO'd this year, right? So we did see an initial consolidation pattern taking place for a very long time, for about almost 6 months before we actually saw this breakout. Now, a consolidation breakout, technicians, we do love that. And now you're looking at the 20-period moving average as your area of support, and you want to continue to ride that to the upside. It's also made its own kind of channel if you make a trend line from the highs here, and it can continue to kind of go up. You talked about that 180 level. If you kind of extend that trend line, you are looking at around $200 to $220, Nicole, if that 20-period moving average stays in the trend that it's doing right now. If not, we see a breakdown. First area of support, $157. Next one is going to be $140. And there is a gap there. That gap on earnings between between $82 and $103 has not been filled yet. If we do see a complete failure, look at that one to be also tested. But the trend is definitely up. MACD is actually kind of stalling out here. Momentum might be waning. And the RSI is actually in a bearish divergence for right now. But once again, very early on when it comes to the stock's trading history, so we're not sure exactly how it's going to pan out utilizing that indicator.
All right. Thank you for that, Kevin. Achilles, final thoughts on this name on Reddit.
Yeah, the thing with Reddit, like Kevin said, there's very limited history because it's just
Right.
IPO this year. So you really are doing a gambit right now, a little bit of a gamble, but at the same time, the trend has been very favorable for this stock, and we think that we should see above 19% this year in this
Right.
stock, and you should be well rewarded for it.
Right. You had other stocks that you're already thinking about for the next big three, I know. What's your big picture on the markets? We're seeing a lot of targets above 6,000 for 2025. Some of your thoughts, we're above 6,000 now, right? 6,046. But, where do you think, what's going to drive the market?
Yeah, I think at this point where the storm clouds are the bad part is really the labor market, that at this tepid pace that hiring's taking place, there could be some problems there going forward. First quarter 2025. Another thing that I would keep in mind is inflation. We saw the numbers yesterday, and we see that inflation is creeping back up. So is the Fed going to have to take a more hawkish stance? Is it going to have to be more aggressive is the question. Is it going to raise it 50 basis points instead of the 25 basis points? That becomes a question. And you also have to think, when you're talking about a new administration, there's a lot of new things happening with different facets of this administration that are unknowns, different people in place. So you have to keep that in mind. That's why I think first quarter of 2025, you really have to pay attention with what's going on with your holdings and seeing forward how we're going to move to the upside. But I really believe there's going to be some breakouts after first quarter.
I was looking at Boeing, a name that you've followed a lot. Right now it's at 168. It's come up recently from 137, so it has had a nice move over the last month or so. Boeing is spending $1 billion speeding up the 787 Dreamliner output. This has been a name that you've liked over time. Absolutely. I don't know if you're ready to talk about it at all, but when you think about big picture and getting in on names, what are some of the parameters you're looking for? This happens to be on an upswing.
Like you said, we've been in Boeing a long time. Recently, the most recent entry was 140 we got in at. So we're experiencing that move to the upside. This can be, I'm going to say it now, this is going to be a $200 stock in at least 18 months. I think that this is a high quality company. Anything that was bad has happened. The strike is over. They're building planes again. We're going to start seeing revenue reflecting that. They've become leaner through the layoffs, which they had really no choice to do. So I think that Boeing is an amazing company going forward, and that all the bad excuses are going away by the wayside.
Wow. Yeah, 1 month it's up 20%. Like you're saying, you had it at almost the low. So you had a 140, it's a 137 was the low. And it's at 168 today. All right, Aquiles Larrea of Larrea Wealth Management, Kevin Green there on the charts for the big three today. Thank you both.
So we're going to talk about the economy. Historically, Bloomberg has used a recession probability model that incorporates factors like housing permits, consumer sentiment, corporate profit outlooks, and treasury yield gaps. It doesn't always work, though. For example, in October of 2022, Bloomberg projected a 100% chance of recession by October of 2023, driven by aggressive Federal Reserve rate hikes, tightening financial conditions, and persistent inflation. Obviously, that didn't happen. Here we go again. Consumer confidence fell this month by the most since August 2021 on concerns about the outlook for the broader economy, that according to Bloomberg. Many consumers actually think we will see a recession later this year. That pessimism has more than half of consumers putting off major life plans due to their uncertainty over the future state of the economy and the possible consequences of Trump's tariffs. Of those, about a third said that they're putting off buying a house, while I was going to say probably the interest rates and the lack of housing stock might have something to do with that, while 1 in 6 have put off education plans. Maybe they think, well, under Trump, you don't really need to be educated. And 1 in 8 have pushed back retirement. And that, I think, is an actually useful measure. Joining us to talk about this is friend of the show, Aquiles Larrea. He's the CEO and founder of Larrea Wealth Management and the author of the book Wise Up With Your Money. Check out his new YouTube channel, Aquiles Larrea 1061, Aquiles Larrea 1061. Aquiles, thanks for joining us here on the TMI Show.
Thank you for having me. And I'm still worried. You guys still got me worried about the whales in the previous segment. Put a buoy out there. Come on, I agree.
Put a speed limit out there. Come on. That they're getting chopped up by the boats, and these are endangered species.
There's not even 100 of them left.
That's so scary. And like RFK Jr., I know it's not his department, he's HHS, but he is a known, old school environmentalist. You would think he would speak up and say, "Hey, Doug Burgum, what's up with this, man? Like, put a buoy out there with a speed limit."
Doug wants to get rid of him. He wants more. He wants more species that could do work for us.
I know. Oh, I'm so sad about that, and I'm sad about our economy.
Should we be? That's the first question.
I think.
Should we be? I mean, I feel I'm not so convinced that we're about to, go tits up.
Recession?
Yeah, I'm not convinced of that at all. How about let's ask the expert.
Guys, the R word, really right now? Come on. All right, let's break it down. Let's break it down. All right. How do you have a recession? 2 negative GDP quarters. Okay, so 6 months worth of GDP at a negative growth rate. First off, the growth rate in the economy, although slowing down, is still moving at a pace that I'm comfortable with. Unemployment is still somewhat controlled at this point. So the factors, those are the 2 biggest factors that I see for the R word to get yourself all crazy about and worked up. Guys, it's not happening right now. I don't see it. Maybe I'm missing the boat on something here, but what I think at this point is that we are definitely in a bit of a slowdown. The question now becomes, is it the tariffs going to throw us into a higher inflation mode, which thereby starts curtailing the growth, starts upticking the unemployment, and driving us towards the R word? That really is the question.
And possibly contributed by rising unemployment due to laid off federal workers. How much of a factor could that be?
That's such a small segment right now versus the population as a whole, but it is a concern, of course. But at this particular point, it doesn't, you can go and find 100,000 jobs more, and fire all those people. You're still not going to have a percentage move to the downside that people are saying. Right now, there's a lot of anger out there because he was going to say he's going to bring down prices. The administration said they were going to bring down prices, going to help find more employment, and they're doing the exact opposite under the guise of, hey, we're just cleaning up the mess that the previous administration put in there. Come on, guys, let's see what's really here. Whenever you talk about Donald Trump, whenever you talk about this administration, the first question I would ask myself is, where is the money? What's happening with him and his administration? Who's making out on this? And I don't have the answer right now, guys, but when he makes an announcement that's shocking, you should be asking yourself, okay, who's getting paid on this?
Well, Aquiles, I mean, he's already now moving forward with the latest tranche of tariffs, right? He pulled back for a month. The last time that you were on, we were talking about this. It was going to happen with Mexico and Canada. And now he says he's going through with it. And he says it's coming on Monday. The cost of everything has gone up. I mean, I know everyone's like hyped up about the eggs right now because obviously it's a kitchen staple. Everybody has to have eggs in there, to make, a lot of dishes. I would say in my household, we love eggs. But everyone's frothed up about that. But now you have this new trade war looming, not only with our neighbors, but overseas in Europe. Ultimately, isn't that price hike going to be paid for by the consumer? And how are we going to afford that?
Yeah, that's a great question, and it's a great observation. So what I see is exactly that happen. The pricing of current goods and services are not going anywhere anytime soon. All right. I don't care what this administration says. The reason being is, as you said, once the tariffs start hitting us, we are paying it from day one. From day one, because those costs are going to be passed on to the consumers. We are going to pay a lot of money for it, and there is no relief in sight for high priced goods, in my opinion, at this particular point in time. Also, you have to ask yourself beyond that, look to history. Anytime the United States went into a protectionist or isolation mode, the economy shrank, the goods and services went up, and led us into, the question is, will it lead us into the R word or will it lead us into the D word? All right. Now, I'm not going there just yet. I don't believe that we're heading towards the R word just yet. But this is, I can most certainly see why some economists are saying, yeah, this could possibly happen towards the end of the year and what have. I don't believe that. I think there were more factors in 2 years ago for a recession, to appear. And I
Achilles,
really thought we were going to have one 2 years ago.
Let me ask you about two questions. First, one sort of micro, one sort of macro. So micro, is there still, it's my feeling that there's still pent up demand from the COVID lockdown, right? For consumers that are they're still looking to go out, buy stuff, travel. The airports are crowded. It just seems like, so I'm just wondering if that's your assessment as well. And then my other question is the idea of the traditional question of, recession versus non-recession versus, obviously we haven't seen a depression in a century, but I mean, is that metric maybe no longer useful to describe the current situation? Seems more like a froze session or something where it's like, people have houses on sale listed, but they stay on the market for, 200 days because they're priced too high and nobody can afford them and interest rates are high. But unemployment is low, but there's not a lot of hiring going on. People just aren't really moving. In other words, there's an ennui in the economy that's not really reflected by traditional barometer of statistics. I mean, inflation's not really high, but prices remain high. So, people are still like unable to really afford the rent and other things. So is there something else going on, something new going on that probably could be described differently?
I think it's a lot, it's this fear, uncertainty, and doubt going on right now, the FUD. And what's happening is that people are, as you mentioned, the actual numbers, people enjoying themselves and taking those discretionary costs are still flowing now. It is never a sustainable thing in the economy, but it is still going on right now. Purchases are still being made in housing. Let's just take that for a moment. Housing, it's about to turn from a seller's market into a buyer's market. You're starting to see incidents where the sellers are having to concede more to buyers. And, I was telling people wait 6, 8 months, but it started earlier, where you can go put a bid on a house, and you're going to be able to pick it up, and you might get some concessions in there as a good price or a seller's credit, they call it. But overall, we are seeing a positive trend with negative sentiment. So that's that X factor you were talking about,
That's so weird.
where what's the underlying thing? Still a lot of positivity out there. And I got to tell you, I'm so positive, I glow in the dark sometimes. But when it comes to these type things,
or are the numbers
sustainable.
wrong? There was a piece in Politico came out about a week ago that talked about how unemployment doesn't, like you're counted as employed even if you work like an hour a week.
Yes,
you're not employed really.
BLS data is a scam nowadays. We can't trust BLS data saying that we're less than 4% unemployment. I mean, Ted and I are examples of some unemployed people right now. We were made unemployed,
but we're not counted as unemployed.
Why wouldn't we be though?
Well, there's a lot to that, and you're right. A lot of people are working part-time, and those numbers are getting counted in there. People are working the gig economy, and those numbers really don't figure into that. People will do, at the bottom line, I think, guys, is that people will do whatever it takes to survive, for their families and for themselves.
But they'll be miserable doing it.
Of course, but at the same time, it will be done. And how it figures into the overall unemployment numbers and the like is not an easy figure. And we're just going to have to go on some of the traditional data, but the economy is still in a good mode versus when it, I want to say, around 6 years ago, or even just recently with the inflation being 11% or more. We're in a better place. The inflation rate is still somewhat measured and controlled. It may go up, but the real caveat, the real danger here is prolonged tariffs and their effect on the sustainability of these particular numbers that we're seeing now. Are we going back to 7 to 9%? Are we going back to 11%? I don't foresee it right now, but once again, protectionist and isolation policies have never been good for the U.S. economy, will never be good for the U.S. economy. It's a gimmick. It's something that I don't believe in ever, because we make so much money with our partners than just trying to think we're going to tax them shoot ourselves in the foot.
Let me make the argument for tariffs for the Trump point of view, right? Which is that, okay, so prices go up, obviously, when we slap tariffs on imported goods. And when there's retaliatory tariffs, we suffer, we're not able to export as much as we'd like. But at the same time, then we protect American jobs, and that obviously has a ripple effect in the economy. If we especially, we still have some manufacturing, we'd like to keep it, what we've got. So the question is kind of I think policymakers during the period of deindustrialization of the 70s through the 90s really made a mistake where they tended to emphasize the American consumer at the expense of the American worker. And this almost seems like tariffs are an attempt to redress that. My personal feeling is it's probably too late. It's probably not the right solution for the situation that we now have. But I mean, that's the counter argument, right?
Yeah, and I also I agree with that, what you just said. I also think that the American worker is still in jeopardy right now. But here's what could happen, and this is the positive side. The only positive side of tariffs that I could see is that, say they start bringing the factories back to the United States, which I really honestly don't see big movements on that side, but who knows? But we start to see more hiring. We start to see more expansion. This is where the tariffs could come in. And ultimately, I believe this administration, tell me if I'm wrong, they want to eliminate the IRS. And if the tariffs take hold, and let's say it really goes to the countries that are paying them, How different would this economy be if we, as individual taxpayers, are not subject to paying the high
Wouldn't that be?
taxes that we are right now?
I mean, first of all, I mean, you and I both know, Aquiles, there's not enough money in tariffs, right, to make up for
Correct.
income taxes, right? It's like less than 2% of revenues into the Treasury currently come from tariffs, and even if you jack it up, you're not going to get to 100%, right? But like, I guess the question is, isn't that like the most, you're going back to a 19th century economy, which would be so insanely regressive that we can't even imagine the level of poverty and misery that we would see across every economic class that's not super wealthy.
Right. And imagine kids working full time during during that time. Imagine no worker safety rules. It was a pretty miserable time. I agree with you.
Money stopped circulating a few times. It was that bad.
We most certainly need to take it back to the 70s, when we had the oil crisis, and we had high interest rates on everything. That is what I foresee being more of a reality than anything else.
Yeah,
but not at this point.
When America was at the peak of its power, we had a really high income tax on the wealthy. The post-war period before the Vietnam War. Yeah.
Yeah, absolutely. Yep. I also believe
Trump is moving in the opposite direction. Let's not forget. It seems like what they're doing, he says it's temporary, is that we're going to slash these taxes and basically retain these loopholes for the ultra rich temporarily. And we're going to fund it by cutting Medicare and Medicaid. So that's, for me, even though the data the last 2 quarters are not consistent with what we would predict for like recession, because of the rhetoric, I think, coming from the Trump administration, that's why I'm really negative and bearish on what's going to happen to the economy by Q4, because if we're funding these tax cuts on the backs of the poor and working class through, Medicare, Medicaid, stuff like that, these aid programs, that's how we're going to fund it. And he says it's temporary. I think that's bad news for the regular retailers. Like, for example, Joann Fabrics is going bust. All 800 stores being closed. All these different stores are going belly up. And we're not seeing anything but these Silicon Valley bros really expanding their empires.
And they don't hire anyone is the problem. Right. I don't know if there's really to me, you guys correct me if I'm wrong. I think the daylight I'm seeing between Aquiles and you, Manila, here is about timing. I think what I'm hearing Aquiles say is it's not going to happen this year. It could happen, but if it happens, it'll be later.
Yeah, absolutely. I actually think that if it's going to happen, it would probably be either first quarter of the year or second quarter of the year. Mm-hmm. And I don't think it's not going to be as bad as people are saying. All right. But once again, the administration could completely reverse course. They've done it several times already in its brief tenure. So as far as that's concerned, it could completely do a 180 and they get rid of some of those policies because they see very quickly that they don't work. But who knows, guys? It's not really a sustainability thing. What if, I pose this to you guys, what if the economies that we're slapping these tariffs on play ball? That's going to be a completely different ball of wax. We're going to also see growth. We're going to see unemployment remain controlled. And those are the factors that go into the... What's that?
I think they will play ball. I think we've already seen that with Colombia.
Well, we saw it with Mexico, and we're definitely going to see it with Canada. It's just easier. It's the path of least resistance. Play ball, play nice, and make money. That way your particular country continues to grow.
Yeah, Robbie, you've got a question for Aquiles.
Yeah, just real quick. One of the things that Elon Musk was saying in his earlier soundbite that we played was that one of the reasons he was taking a chainsaw to the federal government was because of the national debt, trying to get the deficits down, trying to get spending under control. My question to you is, does the national debt even matter anymore with it being as big as it is? And if it does matter, why would they be pushing for tax cuts for the rich instead of keeping revenues up to pay down that debt? It doesn't make any sense. It seems like they're talking out of both sides of their mouth. And I don't understand.
Yeah. Administration speak with forked tongue. Yeah, absolutely. I agree with you on that. Robbie, great question. What I think, if you go a little bit further with what you're talking about, you have to ask yourself, all right, we're going to do all these policies, yet at the same time, we're giving the rich a tax cut because they still believe in that nonsense of trickle-down economics. Because that's absolute nonsense, and it's been proven that it
Or
really
do they believe
does
it,
not
or
work.
are they just saying it as an excuse just to get what they want?
That's it. It's a measure of control, in my opinion.
So, does the national debt even matter? Is there even a point in trying to pay it down at this point?
We've had national debt since the Revolutionary War, and people they gasp, oh my God, it's this and all that wonderful stuff, when they should be saying to themselves, the type of debt that we have, a big portion of that we've had for a long time, and it's good debt. It's not something that we've not seen. Although, people forget the debt, if you take it from 100 years ago and look at it now, we're talking exponential growth. But we've also had exponential growth in our economy, in our growth of the country. At that time, we could say, hey, we only had 100 million people, just talking out loud. And then now we're over 350 million people, I believe. So it could look completely different 20 years from now. There will still be a national debt. That's not going away. I don't think it's relevant anymore. I personally believe that some of that debt is good to have, and we continue going forward. I think the debt hawks it's a folly to try to think that you're going to get rid of the national debt by cutting Medicaid. Did you look at there was a Wall Street Journal this morning article this morning, and they were talking that all these cuts that Dodge is doing won't even have an effect of 4% on the United States as a whole. So, they know the numbers. This administration are not fools. They are painting a picture of, oh my gosh, there's this A, B, and C. And when the reality is truth told, is that it may be absolutely false. It might be X, Y, Z. Guys, when there's a recession, it doesn't come up on your door and knock on your door and say, hey, I'm here, guys, let's have a party and stuff like that. No, the recession comes, you usually find out 4 to 6 months after. Mm-hmm. That's how economics works, because they don't have all the numbers in to tell you, hey, we're in a recession. But you sure feel it. I mean, for all we know, we could be in a recession in particular sectors, so foodstuffs, maybe. Other sectors, maybe. We don't have all the data, and the data is inconclusive when we get it. There's not enough to say definitively yay or nay.
So what's so frustrating about this, it reminds me of Malthusianism, right? Which was Thomas Malthus in, I think it was the 1780s. He was a British demographer, and he kind of believed that the population around 1800, year 1800, of the world would tip into the point where it would become unsustainable and nobody could have enough to eat. We would all starve to death. Humanity would die. Obviously, that didn't happen. But there's and sort of like with the national debt, there's sort of like a psychological feeling like, well, look at this chart. Look at how fast the debt has grown. Look how fast our population has grown. How can, in my lifetime, the population of the world has gone up, I would say, I don't know, maybe 5 times. It's probably quintupled. And it's like, how is that possible? And like, so at some point it's going to become unsustainable. We should stop before it does, but we can't know in advance, A, if that's even true, or B, if it is true, what the evil number is that goes too far. And then I guess it's like, so we just keep going and hope we don't hit that number, or we don't know that number even exists. If that number doesn't exist, I mean, it's really a very strange psychological experiment.
Yeah, and who knows what the reality is? We could be within the matrix and all that crazy stuff, but let's not go down that rabbit hole. Let's stick what we got here. The factors for a recession are not in play at this current moment. Mm-hmm. I do not believe that we are at a point to head into that negative growth. I think that, there's some rumblings, absolutely, but the numbers do not support it. They never supported before a recession actually occurred. There are some signals, but I don't believe that we are at that point, guys.
Maybe as a freelancer, I'm a canary in the coal mine. I've always known when a recession was upon us before it was declared, because when that happened, my payments started to come slower, or some of my clients would go out of business while I was waiting to be paid, or I would get cancellations. I mean, anyone who's a freelancer and supplies to a very strapped industry like journalism, you just know it. And then it's like, well, duh, it was a recession. I knew that. I'm not seeing any of that right now. It's like everybody's paying on time. Everybody's like, they're not worried about paying. No one's canceling me. It's not like everything is robust, but everything's just puttering along.
Like I said before, recessions don't come and knock on your door. They don't say, hey, come on, what recessions do. You feel the pinch. Like you said, you feel the pinch before the pinch arrives.
Before you see the pincher.
The jaws.
Behave yourself,
like, who's
Manila.
Pinching? Like, stop, damn it, who's pinching? That's great. Like, where did that hand come from? And it just creeps up behind you. I agree. I think personally, it's gonna happen before Q1 of next year. I'm gonna call Q4. Last thing I want to pick your brain about, Aquiles, before we let you go, is, how is Wall Street responding to all of this? Because obviously there's a mishmash. It's a mixed bag of things coming from Trump, right? Like all of these big tech companies, these meme coins, just everything is all over the place. How is Wall Street responding to this? This is your area of expertise, your wheelhouse. How is Wall Street responding? Because however they respond, it does have ripple effects to us regular folks, the consumers, like Jane Doe out at the grocery store.
Yeah, absolutely. Let's first and foremost call the canary in the coal mine, like Ted said. What I see, especially on the street right now, is the fact that we've had a run-up of 10% in 2 months we're just getting the correction now, so we're seeing that movement to the downside. It's, what I tell my clients, this is normal. This is how you have an efficient market. All right. This is not a long-term trend. Nothing that I've seen on the investments that we are in says that. As we talked about before, orders are still coming in. There is still growth guidance by these companies to the upside. AI is in its infancy. It's like a little baby. It's not even 2 months old. All you can do is cry, kick, and scream. And of course, go to the bathroom. So you take care of the diaper. But overall, the overall economy over the stock market, should we say, is in a positive trend, because we see how resilient the stock market comes back when, there's a lot of volatility. So it sure freaks everybody who doesn't know about volatility in the market out. It freaks you out a little bit. But the resilience that we have seen in the market, honestly has been somewhat breathtaking. And I foresee more of the same this year, that we're going to see run up, correction, run up, correction throughout the year, and still walk away double digit returns in the market. I see fund managers, hedge fund managers, private equities gearing up to make a ton of money this year. Present company, we're included. We're doing the same thing. We think that our clients are going to do really well. Maybe not as well as last year, but definitely above 10% year to date, barring any calamity long term or swan event like we saw back in the pandemic. But I really don't see that at this point. I don't see anything supporting that at this particular point. So I'm going to call the recession, as I said before, between Q1 and Q2 of 26. And I'm also going to call for a new high in the S&P and in the Dow Jones that will occur over and over again this year. Don't be surprised if you see it happen more than once.
So that would obviously have some political implications for the midterms.
Absolutely. It's people, they don't touch anything in the midterms if the economy's going great.
Yes.
So it might be more of the status quo. But if it starts falling apart and we start having long-term corrections, we're absolutely, the consumer, like they did in this election, they're going to ask themselves, well, what you're doing is not working, and maybe we need to try something new, which would be logical. And, you can't blame the voters for doing that. We'll see.
Yeah. I mean, that's all anybody can do is we'll see, right? I mean, this the thing for presidential elections, they say, ask yourself, were you better off 4 years ago? And with these midterms, it's very simple. It's fresh wounds, because they'll say, were you better off 2 years ago? Right? For Congress, like, were you better off 2 years ago? People can think back that.
And Trump and the Republicans will not have the usual defense. I'm not sure how effective it ever is. But, he inherited this economy when he came into power from Biden. It takes a while for because he's so brash and so radical, and he's made big promises about, like, only I can fix it, about everything. He owns it. He owns everything. No question about it.
And that rhetoric is going to most certainly ramp up in a shorter period of time. Like you said, right before the midterms, people are definitely going to ask those hard questions. They're already doing it now. Look at all these contentious town hall meetings that the Republican side is having with their voters, because the voters have not foreseen, or they have not seen any change in the daily cost of living. And that was what the Republicans ran on.
Yeah, they're doing stuff that they didn't run on. I mean, who Trump didn't run on the Gulf of America, or getting rid of USAID that nobody'd ever even heard of.
Yeah, I don't know. That's all we can do is, I think it's gonna be a wild ride, and it's gonna be bumpy. I think by Christmas we'll turn around and be like, oh, you've been pinching me all along. I think that's what's gonna happen.
I'm with Aquiles. I think I'm on Team Larrea here.
I'm super negative about all of this. I'm like, boo. Like, this is, I think there's, it's my spidey senses. I'm going to say my reporter spidey senses that I feel something's not right.
My cartoonist senses say, yeah, next year, maybe.
I think it's not right. I think it's coming sooner, but we'll see. We'll see. Of course, we'll invite you back on, as always, to kind of break it all down, because you're there. You deal with clients, you deal with Wall Street. You kind of get a sense of both, right? And see how confident they are, especially if your clients are not feeling confident. I think that says a lot too, right? So I think you're a good person to ask. So
hey, a lot of traders on the stock exchange that I've talked to are very positive right now on the market, but they agree with me. We need the corrections. We need to have that uncertainty and that regression back to the mean, as they say. They famously say, we need the regression to the mean to keep what I call the poker game that is the market honest. So we need that. Don't be afraid of it if you're an investor. And if you're not sure, talk with your advisor. Talk with someone who actually has knowledge in this arena.
Yeah. Bottom line, whether it's my timeline or yours, the point is the pinch is coming and it will reveal itself in the very near future. That's the takeaway. It's coming. It's going to be in this presidency for sure. Like
Ted, are you getting the sense that Manila just wants to get pinched?
I think she wants to be pinched. Yeah.
You better talk to her partner about that.
I'm already feeling the pinch.
Yeah, we were talking about kinks earlier in the show. So
I know that's whole different topic. Different topic. You're supposed to enjoy your weird kinks or fetishes or whatever. I'm not enjoying this pinch right now, having been laid off.
Pinches in your mind.
I don't know. I'm just being negative Nancy right now. So I didn't invest the way Nancy Pelosi did. So
just
remember that a congressman can invest without impunity.
Right.
If I went and did the same thing, I'd be in jail for 20 years.
Right. It's incredible.
It's crazy.
We should have followed Nancy Pelosi's stocks.
But you still can, right? There's that investment club.
There's that tracker
that does that. Yeah.
I think it's like the Nancy Pelosi investment tracker, I think is what it's called or something like that.
The Pelosi
It's pretty funny.
Yeah,
I think so. It is the Pelosi index. It's true.
But I always remember something that my old boss at Bear Stearns told me when he was training me. He's like, every day, this tells you how old the story was. Every day, 100 million shares change hands in the New York Stock Exchange, right? He was like, 50% of the people who are in these transactions are right, and 50% of them are wrong. Every trade, one person's making a mistake, the other person's doing the right thing. And you just have to remember, rising market, there's just as many opportunities in a declining market. Just as many.
Absolutely.
So
you can make money in any upside or downside.
Makes no difference. Yeah, it's about the bet.
That's right. You can hedge. You can make money in any market.
Always
appreciate your expertise, Aquiles. Thank you so much for joining us. This is Aquiles Larrea. He's the CEO and founder of Larrea Wealth Management. He's author of the book. His newest one is called Wise Up with Your Money. It's available now. You can check it out on Amazon, for example, and then go to his brand new YouTube channel. It's his name, Aquiles Larrea 1061. That's the YouTube channel. Thank you so much for your time, Aquiles. We'll be talking with you again, I think, pretty soon.
My pleasure, guys. And hopefully we'll start to see some even more good news in the economy coming our way.
Yeah, we have to talk Manila down from her pinch.
I'm just negative Nancy. That's all, because I'm not in the Nancy Pelosi boat. That's all.
It might be just the day. Today she might be negative. Tomorrow she's like, next thing you know, blue skies and rainbows.
No.
She's INTJ.
Death, rain,
we don't roll that way.
Death, rain, and destruction for 2025. That's my outlook.
All right.
Thanks, Aquiles.
Bye, Aquiles.
Bye-bye.
Welcome back to Trading 360. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange. So glad you're with us here on this Wednesday, hump day. We're making it through a busy week, selling off today. It's time for the big three. 3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the charts. Here to take us through the trades, Aquiles Larrea, Larrea Wealth Management, right here with me on set. Thank you for being here. So, look, it looks like we might have another down week, but people are buying on the dips, they tell me. Some of your thoughts on the action. What have you been doing on days that sell off?
Great strategy. Anytime you can get a discounted price for high quality stock, you want to be in there. You also want to buy up high quality companies that are, say they lost in terms of earnings. They didn't make the earnings, and there's an opportunity there to pick them up. We as value managers like to go and like to buy them at this significantly discounted price. So I think the tariff talk and now with the inflation talk, this is not new news. This is stuff that we've talked about before. This is stuff that everybody has known about. But now the question becomes, is it going to be a long-term thing to hurt us long-term?
All right. Well, you have a few names now. The Teladoc and Reddit we're all familiar with. KC, less so. Kingsoft was brought to you by some people you know. Let's check it out. Tell us a little bit about this story that has really run up from $2 to nearly $19.
Yeah, it's been an amazing stock, has been poised for exponential growth. We believe that this is a cloud-based Chinese company in terms of the potentiality that they have in terms of the stock growth. We're easily looking at a 10 to 15% move on the upside. We also believe that this company is going to be a leader in its sectors, and we're not the only ones. There's a lot of houses across the street that are putting buy recommendations. We're simply initiating the coverage for it right now. I want this to be like a Palantir, like we did last year at this time. We talked about Palantir at $17. I see similar potential with KC at this time.
Wow, that's exciting. And Chinese stocks have been doing well lately. You've had the Lunar New Year. Let's see what Rick Ducat has to say about the charts, please, Rick.
Certainly a strong performer to the upside recently. We can see that right about here, early November, that's when things really started to take off shortly before we had this earnings event. Then you can see that from there, we have mostly stayed pretty far above our relevant moving averages that we follow here, save for this little dip, in which we did close below it here. This low point gives us kind of this kind of line of best fit trend line that we could follow here. But then this was a springboard, I guess. This was the consolidation point from which we had another very sharp rally here that took out those initial highs and also gave us a gap to keep an eye on here. So if we do keep pushing to the upside and keep following this rather steep trend line here, momentum would have to catch up a little bit right now. You can see we had a bit of a dip. We broke through our RSI trend line already. However, it is still pushing back above that overbought area. So it'll be an interesting situation to see if we can muscle out some new highs in this name here and reassert this trend. So if we were to look to the upside, the +3 standard deviation channel, 3 standard deviations above our blue linear regression line, comes in at about 1920. So that could be a potential resistance point to consider. To the downside, this kind of gap type area here, the highs that we had before our gap up, 1350, 1284, that would be a key point to watch as well going forward if the move starts to fall apart, Nicole.
Look, it wasn't that long ago that we saw UBS put a buy rating, as you noted. They had a target of 1250. This was in early December. It certainly surpassed that. I mean, what kind of upside do you see here? It's at $17.86 today. What do you think it could hit?
I mean, realistically, in the near term, we're looking at anywhere between 15 to 17%. And when I say near term, I do mean 12 months. If we're going out 18 months, we could be surprised. This could be another, like I said, Palantir, where we just see exponential growth in the sector as a whole, so we can make some extra money there.
All right, one to watch, a new name that we don't really follow closely. So thank you for that one. How about we take a look at Teladoc? What's going on there, and what were your thoughts recently?
Teladoc is interesting from the fact that this is still new, where people are kind of, I would say the younger generation is still getting into this right now, making those calls to the doctor on hand. But there are a lot of issues and a lot of challenges. So they're going and they're acquiring, say, before someone needs the actual examination. They purchased a company called Catapult that's going to do that on a regular basis for them. What I see for the future for them is that they are going to have a conglomerate of companies help them with all the examinations that will need to happen. So strategic alliances aside, we could be seeing 10% on this stock in a 12-month period. We also see high quality. The problem here is the unknown is the near term. Are we going to face the same challenges that other Humana, Cigna are facing at this point? Because as the sector goes, Nicole, the whole, this will be affected by that.
Okay, so we'll watch for that. So you see 10 to 14% upside for Teladoc. Let's see what the charts and the technicals tell. Rick Ducat.
Yeah, so when we look at this one, it's an interesting situation with a long, gradual decline that took us down here to 676. And you know, really, more than gradual, you know, it was kind of a painful move there. But nevertheless, we are up 85% from that point, making a very modestly sloping upward trend line here in blue. But recently, it's been rather exciting here. Look at the heavy volume that we've seen, volume that was at least 50% above the 50-day simple moving average of volume. These volume spikes here, all on the up days. All of that suggests strong conviction on the part of traders during this surge to the upside here. Now you can see that we also took out this previous set of highs near about 1239, as well as our long-term purple 252-day exponential moving average. So we're breaking above some key areas. Notice as well that we are retreating back to those old highs near 1240 or so. It's common for stocks that break out to have a bit of a drop back to earth and retest those old highs. Old resistance becomes new support. I'm certainly not saying that's what's going to happen, but it's a common situation for the trend to continue after that happens here. So now to consider our standard deviation channels and volume profile. Well, you can see the heavy trading, the volume profile point of control is down here at 936. So that could be suggestive that a bottom is potentially in here. We also have nodes here around 13 and here around 15. And we are rejected at our +2 standard deviation channel, so that could be a boundary around 1365. To the downside, though, we've got our confluence right here, our moving average and our old highs just below like 1240, Nicole.
Okay, thank you. Sometimes you see the reversion to the mean. Sometimes you see some catalyst that takes something off. I mean, Bank of America has a $13.50 target. You see much more to the upside on this one. This is today, Bank of America put that. Your final thoughts on this name?
Yeah, don't expect it to jump overnight. I am looking on the more conservative side of 18 months to get that double-digit return. But if the sector behaves well, we should see a real move to the upside on this. And if you want something cheap in the sector, this is it.
Okay. And last but not least, we take a look at Reddit, a name you liked some time ago. We've had on the CEO here on our network. It's been an incredible performer. Look at this. I mean, right now it went from $37 up to $230. Some of your thoughts on where it could head now at $217.
Yeah, we had to. It's funny. We were here 2 months ago, and it was, in the 170 range, and now it's in the 211, 218 range. My thoughts immediately is that I have to revise my goals on the upside. So I'm thinking 250, 252 in the near term. And I am thinking that is conservative at this point. If the conditions persist, the basics remain the same, Nicole, we should see this stock shoot up really nice in the next 18 months.
Wow.
I also think that I might be a little conservative on that number, because if you look at just last year's numbers and the earnings that they were coming along with, even though they were new, you still have a company that's high quality and an opportunity to make money on an undervalued sector.
Okay, what do you think here? I mean, he really sees some upside, 250 even. Tell us a little bit about the chart, please, Rick.
Yeah, it's an interesting one, and it's an interesting company as well here. We were talking about it earlier today that oftentimes, Jenny and I were saying we use Reddit to figure out the solutions to common problems. I often use it when I'm trying to figure out something in Microsoft Excel. I find the answer most often through Reddit, to be honest with you. Nevertheless, we can see that the performance has been a pretty strong upward sloping channel here. We topped out recently around 230.41. A bit of a false breakout there, unfortunately, for the bulls. We were pushing above that upward channel, but now we have retreated. We have not really tested those old highs that we had, kind of around 207 or so. So that would be one area to keep in mind to the downside if price deteriorates further. RSI also interrupted. We did see a decline below that green trend line and below that overbought area around the same time there. So a bit more of a bearish signal, but really not something that would be too too much cause for alarm, I think most people would think, because it's common for momentum to slow down when a stock heads into earnings or any other kind of known event risk type situation here. So not really too terribly concerning in that regard. But now we can see here that if we were to keep moving to the upside, we are quite close currently to our +1 standard deviation channel, which coincides with the upper boundary of our channel. So around 223 perhaps could be one upside area to watch, then the highs near 230, then the +2 standard deviation channel just below 275. To the downside, the old highs here near 207, and then another series of highs that we saw during this consolidation phase around 182, and then right here, volume node, linear regression line, orange 63-day EMA around 169, Nicole.
Right. Thank you for those charts today. Rick Ducat, great to see you. Aquiles Larrea here on set. We appreciate that you brought us KC and also Teledoc and Reddit today. Thank you so much. Aquiles Larrea of Larrea Wealth Management and the Big Three. Thank you.
All righty then. And so let me bring us in here. Okay. Here we go. President Donald Trump on Monday agreed to a 30-day pause on his tariff threats against Mexico and Canada as America's two biggest trading partners took steps to appease him over border security and drug trafficking. The 30-day pauses are a cool-down period that puts us at the cusp of a trade war that risked crushing economic growth, causing inflation, and ending alliances with the United States' I would say, two closest allies. I'm very pleased with this initial outcome, and the tariffs announced on Saturday will be paused for a 30-day period to see whether or not a final economic deal with Canada can be structured. Trump said, "Fairness for all," he said in all caps, whatever that means. Justin Trudeau, the Prime Minister of Canada, posted the pause would occur while we work together, saying that his government will name a fentanyl czar, not a czarina, but we could have a czarina, list Mexican cartels as terrorist groups, and launch a Canada-U.S. joint strike force to combat organized crime, fentanyl, and money laundering. What, no Space Force? The pause followed a similar move with Mexico that allows for a period of negotiations over drug smuggling and illegal migration. The 10% tariff that Trump slapped on China, however, is still going to go into effect this week, although Trump plans to talk to Chinese President Xi Jinping during the next few days, and the Chinese seem confident that they're going to be able to talk Trump off the ledge here. While the trade war was feared by investors, companies, and political leaders, now seems less likely to erupt. That doesn't mean that the drama is over. Canada and Mexico bought some additional time, but Trump could easily renew his tariffs and already wants to announce taxes on imports from the European Union. Remember when Europe was our ally? All of this leaves the global economy uncertain about whether a crisis has been averted or if possible catastrophe still looms. Joining us to talk about this is Aquiles Larrea. He's CEO and founder of Larrea Wealth Management. He's the author of the book, Your Money and You, The Ultimate Guide for Latino Entrepreneurs. Aquiles, thank you very much for joining us here on the TMI Show.
Thank you for having me. Always a pleasure.
Always a pleasure to have you. So, Aquiles, do you think, what do you think is going to happen at the end of let's start with Canada and Mexico. 30-day pause, is it going to be extended? Or is it just going to, is there going to be some sort of agreement here? Or could we still be staring down the barrel of some tariffs?
Anything's possible at this particular point. I think that the 30 days gives them a little bit more time to, hey, let's slow down a little bit. Let's open the channels of communication, which is never a bad thing. And at the end of the day, isn't this about money? Because that's what it feels like to me. You know, are we going to get a bigger slice of the pie and render unto the U.S. what is the U.S. at this particular point? That's my opinion on this at this particular point. I think that at long term, in terms of an agreement on tariffs, let's go on the positive side first. We come to an agreement at the 30th day, or we extend it out 60 more days, and we keep the lines of communication open, then that's going to be a boom to us, because that means Canada and Mexico are saying, hey, we're open to the possibility. Let's see what we can do together without us, meaning Canada and Mexico, losing our sovereignty, not feeling like we are part of a deal. My attorney a long time ago would say, hey, a good deal is where one person walks away and their arm isn't hurting, or their face isn't hurting because they got slapped. But on the bad side, let's go to if it turns out in a bad way, then we're looking at an increase in pricing. We're looking at an increase in inflation, which is going to be bad all around and could put us into a recession, guys, because these are the things when you start getting negative growth, all around GDP. That's the classic definition of a recession, and we want to avoid that at all costs. Yes, I understand that the Trump organization is trying to make the Trump presidency is trying to make its mark early and fast, which he said, none of this is a surprise, guys. He's been long. So nothing he's saying is out of the ordinary. Though I do say the Gaza thing took me a little bit by surprise. But, at the end of the day, it is money. We are talking about, if I'm an entrepreneur like Trump is, if I'm an entrepreneur, good or bad, and we're making money, you're going to look good to the American people because we perceive we're making money.
I kind of want to break these down because we have situations with now Canada, Mexico, China, and the EU, and I don't know, Vanuatu can not be far behind, right? So with Canada, I'm mystified because there's by all accounts less than 1% of the fentanyl that enters the United States enters through Canada, and basically nobody's sneaking from Canada into the United States. Maybe 6 people. Just nobody. So what was that all about, really? What did Trump really, why is he messing with the Canadians? The Mexico thing, I understand. It's well established. Fentanyl, drugs, blah, 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 blah. Migration, I get it. That, I just don't get what that's about.
Well, it seems to me that what it's about is, once again, we started with Mexico. He's thinking, let's start with Mexico. Let's work with the war on drugs again, going back to the classic Republican themes of the day. And so Canada would be another way for Mexico, the cartels in Mexico, to start bringing and funneling in drugs. So they'd have ships or what have you go up to Vancouver, go up to the Northeast Corridor, and bring it down that way. So he's thinking, I'm gonna, or who knows what he's thinking, But like you said, Canada has no viable malfeasance at this point, to say, I think it's more important.
It's like if I just started hitting my cat Colombia. It's like if I just started beating my cat over the head, he'd be so confused. He's like, I don't do anything wrong.
And this is a classic Trump move because he does the same thing all the time. He does the sensationalism, and then you have to ask yourself, well, okay, but what's really behind this? Because if you look, he already slapped a tariff on Colombia, all right, at 25%, which is a major drug haven. All right. So what we see is a precursor. We saw a precursor of Canada and Mexico at this particular point. But like you said, there's not too much to gain in Canada at this particular point. I think that he's sending the message out. Hey, the free ride is over. In his eyes, the free ride is over, but he doesn't realize that these tariffs are going to do more damage to us as a consumer than really help us. Back, let's go back to, let's just say the 1920s or 1910, when they started using, before the IRS was in vogue, tariffs were the way that revenue was brought into the United States, right? You didn't have big government, so the Republicans.
You couldn't have big government because we didn't have enough revenue.
Of course. And they're thinking, hey, why don't we bring us back to those days? But a lot of times, we just have to point back to history. Smoot-Hawley Act, classic definition. They brought that act into play, slapped tariffs where you could, and it drove us depression. Okay, we were already in a depression. It made the situation even worse, and Hoover did nothing. So at this particular point, I'm scratching my head. Is this a warning to China and Russia? Russia really doesn't have any goods per se, on a large scale that they're bringing into us. But are we sending that shot across the bow saying, hey, here we are, remember who we are, and let's try to, understand each other better? And I think with China, it's more a piece of the pie.
It also feels like fighting the last war, right? I mean, look, I'm from the Rust Belt. I grew up in Dayton, Ohio. It's no place has been as more devastated than Dayton, Ohio, by globalization and outsourcing and deindustrialization. So, I have sympathy for protectionism. But that said, it feels like the horse has fled the barn. Right. I mean, if tariffs might have had a place against like Japan for dumping steel in the 70s and 80s, for example, or for against China when China first was admitted to the WTO in the 80s and 90s, and they weren't admitting American goods, and we had a massive trade deficit, that probably would have been something that the Bush one and the Clinton administrations ought to have considered. But it just seems like now, I mean, I'm sorry, Dayton ain't never coming back,
Neither is Pittsburgh.
Right.
We're looking at the same scenarios here. If you could imagine our special forces coming into a building to clear it out of bad guys, and the bad guys left 6 months ago.
Yeah, that is. I mean, at least Pittsburgh reinvented itself as a healthcare place. Yeah.
Oh, did it? So, Aquiles, I'm glad that you brought up China, because I pulled them up on the screen here, because we're talking mostly about Canada and Mexico for obvious reasons, right? There are immediate neighbors, and it's ironic because Trump is the one that tore apart the first NAFTA, made his USMCA, and then out of the blue said, I'm tearing that up. I'm going to start a trade war with our neighbors again. And then he threw in China for 10% tariffs. And then China, I mean, we all know, everybody in the United States, you don't have to be, a financial guru to know that the U.S. relies heavily on Chinese production of goods, of all the stuff that we use. So China does have the capacity and the power to slap back, right? And they did. And this is what it looks like. CBS here, showing 15% on coal, 15% on liquefied natural gas, 10% on crude, 10% ag machinery, 10% large engine cars. I mean, these are some of the things that the U.S. exports that China takes. China's not going to take this lying down. No one seems to be talking that much about the trade, the tariff war with China, because it's been ongoing ever since his first administration. Where do you see this going? Because China's obviously, they didn't respond this way the first time in Trump's first administration, but now they are. So how do you see that shaking out?
I think it's a preemptive strike on the part of the Chinese. And the second thing, like I said before, we got the sensationalism. The Chinese have made their move. Now we as the Americans are thinking, okay, well, the Chinese have a certain amount of goods and products that come in. But now, in a roundabout way, Mexico has a lot more products coming to them. So, it's cheaper to produce similar in Mexico for exportation to the United States. So that's just one thing to consider. Back to your question, with the 15%, with the 10%, they are slapping that right back at us. We're going to be tit for tat with the Chinese. They didn't go as high as 20% because they have a lot more goods, to offer the United States. So they just went. I mean, the United States has more goods to offer as well to the Chinese. And honestly, the Chinese could be just shrugging their shoulders at this particular moment, saying, okay, 10%, you come up to 20%, we'll take you up to 25%, and we're in a trade war.
This is like poker.
Yeah. Absolutely. And it's worse than
we're
poker.
The ones paying for it, no?
That's right. And we are the ones who need to say to our government, hey, knock it off. Have a little bit more responsibility here. Can we let some more adults into the room? Can we form a bipartisanship to address these tariffs? Because this shouldn't be one person's idea alone. This should be a bipartisan approach, which hasn't been happening in over a decade, guys. The bipartisanship has been lacking severely. It used to be, if you look back to the Clinton days, when you had a Republican Congress and working with Clinton, the Speaker of the House talking, saying positive things. I don't see that leadership here in the current Congress, in the Senate, and the Congress itself. So, the House. So, my particular thoughts and feelings is, how difficult would it be to have everybody, including President Trump, get together in a spirit of governance and say, hey, let's make this happen. Let's make it for the right reasons and happen. Yeah, we need to get some more revenue in. Let's not kid ourselves. Yeah, but let's do this the right way. Let's not just be a petulant child say, we're going to slap you with tariffs and that's it. And you're going to fold because we're the United States.
Well, I feel like that kind of behavior has just been rewarded by the way Canada responded and by the way Mexico responded. I mean, right now, I have video here we can look at. Right now, there's literally Mexican troops being sent to the border. I think a lot of this is over by Tijuana. That they're moving there right now. I mean, they're literally shipping 10,000 border guards. I mean, aren't they folding to basically what Donald Trump wants, because they're obviously trying to avoid this trade war, but at the same time, it's rewarding bad behavior. It's rewarding petulant, childish behavior.
I don't disagree with you. I mean, but we have to remember that the Mexican military is corrupt as sin.
True.
Unfortunately, a lot of there's a saying amongst Latinos that goes, as Mexico, so does the rest of Latin America, Central and Latin America go. So what you have to remember is at this point, Mexico is simply continuing the policies that AMLO started with, of this capitulation to the United States. They were being tough on other things, but they have a new president. She's inexperienced dealing with a gentleman like this, in my opinion, and still showing force. I watched her press conference in Spanish the other day, and she made some really good points about the U.S. But at the same time, I think she's also showing that, hey, we're open to it. We're open to the possibility, but that doesn't mean we're just going to roll over on you. And that's what we have to remember. There are, the politicians in other countries like Canada, like Mexico, actually answer to the voters. All right, the voters will kick them out. I mean, I watched in one Latin American country, there was a pots and pans campaign where they were banging on pots every single day until they got what they wanted, and they did get what they wanted. It sounds funny, but the people forget, especially the citizens here, we forget the power that we have against the government. We just are apathetic in the sense to this. We can fight back, absolutely. We can pressure our congressmen and senators to make more responsible decisions. It's not just, hey, let's lay down, oh, it's too hard. No, it's not going to be that way. If you want true change in the government, and I'm not talking radical change, I'm just talking, hey, if we're going to all get along, we have to all agree, not just one side of the aisle.
Yeah, Americans like being keyboard warriors. I think a lot of it. The pots and pans thing. It's like, oh, that's novel. I hadn't thought about that. So
it's funny. That was Indians in Ecuador. The indigenous population. Yep, in Ecuador, marching on the Capitol, asking for the ouster of a president, and it became not just amongst them, but the entire population said, "Okay, enough's enough." And I think less than a month later, he was out.
Well, do you think this ties at all, Aquiles, with how Mexico is responding? Ties into the mass deportations and stuff that Trump is now outlining and making good on, right? Like he had his envoy Granell going to Venezuela. President Maduro suddenly appears to be friendlier with the second Trump administration, saying, "Yeah, we'll take back 350,000 illegal migrants." Do you foresee that maybe this is part of the calculation with Trump and how he's throwing this tariff threat on Mexico based on the theory that you said, how Mexico goes, the rest of Latin America will go? Well, do you think this is, part and parcel of that maybe he's thinking, hey, Venezuela has a lot of oil. Hey, there's production capacity somewhere else in other parts of Latin America. So Mexico, you better get with it or I'm going to go make best friends with Maduro right now.
That's absolutely true. Yeah, that's absolutely true. People also forget there is a huge oil cache in the Amazons. So the surrounding countries that the Amazons flows through, there is possibility for development there. All right, so that's another thing. A lot of people don't know that, by the way. So going back, yeah, we make the example with Mexico. Maybe something is happening under the table money-wise, guys, which would not be unusual. We have paid off governments for many years down in Latin America. Just take a look at the Contras, with, Reagan. Also, there is another bad byproduct of this. Wanting people back to their countries, you're sending criminals as well, which we did before, and we're repeating that mistake because the MSs of the world came to being from Americans, not the country that they came from. As a matter of fact, the leadership of MS-13 was really more based in Los Angeles. When they got deported back to El Salvador, then all of a sudden the crime rate spiked. The government could not handle it, and took the extreme measures that they're taking right now, with the prison system. And, look at that. We got, Bukele, I believe is his name, came out and said, we are going to offer money for U.S.,
Oh, that's right.
immigrants from there.
Send us your criminals. We'll
and
house
how much
them.
are you going to pay us? How much are you going to pay us, guys? Tell me that isn't corrupt as can be.
It's so insane.
And,
I couldn't believe that when I heard that yesterday.
That's crazy.
And Trump's not like dismissing it out of hand.
Oh no, it's too easy. When think about it this way: the current prison system in the United States, most of it is not private, because we saw that the private was keeping prisoners longer for profit, was doing things that were under the table that they shouldn't have been doing. We're getting paid. Judges were getting paid off for bringing more prisoners into that particular facility. This opens the door for even more corruption. So we need to watch this system. Get rid of the watchdogs, which Mr. Trump has done. Then how are we going to be vigilant on the prison systems? Absolutely not. I don't see it happening. So we as the people need to go to our congressmen, need to go to our senators and say, hey, if you let more private prisons into the system, we're going to have a whole lot more issues going forward.
Well, and then let's not even get into the 30 to 36,000 migrants that are being sent to Guantanamo Bay.
That's so crazy.
I mean, that's
another cash cow, guys. Think about it. It's another cash cow.
It is.
It's going to cost however much it costs to house American prisoners here in the regular prison.
$10,000 to $20,000 a year.
Yeah, I was going to say like somewhere around 30,000.
Depends on the state. Yeah,
per person. Yeah, roughly 20 to 30 grand per person per year. but being shipped out to Gitmo, where it's, not U.S. territory, that's somebody's cash cow for
Well, it is
sure.
U.S. territory, just to be
Well,
clear here.
technically, yeah, that's true. Technically, it is, but it's
I mean,
devoid of U.S.
Bush
laws.
introduced this fiction. There's no place on the planet that is not subject to some kind of legal jurisdiction. And to say that like somehow Gitmo exists in some sort of
Right.
netherworld that is
It
neither
does.
Cuba nor the United States, nor who knows what it is, even international waters, you can't just like commit crimes. Okay.
Right. You
Like,
can't just say it doesn't. Well, but that's because our government doesn't view it. They do view it as some sort of netherland, right? Like
oh,
nowhere.
trust me, that's not true. Like if you pick another Marine's like pocket at Guantanamo Bay in the canteen, you're getting arrested. Okay. I mean,
But not what we do to the detainees. And
Right.
that's my thing is like,
Mhm.
okay, then how much can you charge per detainee, because they're a quote illegal migrant? How much can you charge per head, and how much per guard, per head, per hour, per whatever? What are they eating? The food has to get shipped in. That is a whole micro economy in and of itself. And wow, I feel like Bukele knew that, and that's why he is like, hey, bring them
It's
here.
also humanitarian abuse, if you think about it, because how
for
are
sure.
families going to visit their loved
Yes.
ones in prison down there? How are they going to do it, in the other countries if we start exporting prisoners? And less chance for appeal, less chance. What are you going to have an
Yes.
appeal system down there that we're paying for? Guess what? That's an added expense. That's more money that we're paying out of pocket. Do you
Good
really
point.
want to go down that rabbit hole?
Good
Yeah.
point. There's money in all of this, Aquiles. Like, I'm glad that you brought
Always
that up
money.
because everything, the tariffs, it's always all about money. Even the whole prisoner, this, we like to think that the trade war, tariffs, all of this stuff has nothing to do, that it's totally disconnected from immigration. It's not. This is, especially if you look at it from the Latin American standpoint and what Trump is trying to do with deportations, they are interconnected. And I think it's inextricable. And then you view it even further. God, when you think about the prison system, it's mind blowing. It's always the money.
Aquiles, let me ask you about sort of the unemployment picture, right? I mean, there's literally no more important economic indicator than employment, and it's it seems that the Trump administration is kind of counterbalancing two contrarian impulses. I mean, tariffs are likely to increase inflation and therefore reduce employment, cause some businesses to go under, cause some people to hire less. And we already kind of we have low unemployment, but we don't have vigorous hiring, which is so people are kind of stuck. On the other hand, you also have this mass deportation idea, which I guess will reduce unemployment because it will create, people will be removed from where they're working and will be sent out of the United States. Is that, do you think, what Trump is sort of thinking, that these two things will kind of cancel each other out and he won't be dealing with a high unemployment situation for very long? Or is this really just like, I'm a lame duck, I have 4 years to go, I can't be reelected, I don't care?
I think it might be a bit of both, but let's you brought up an interesting point. When we talk about unemployment, everybody knows the Fed, as far as their job is to help with the interest rates, but the second job that they monitoring is the unemployment, then trying to help towards that end. That's one of the two main mandates that the Fed has. Now, if you start deporting people as they've been doing, the question now becomes, who does that job? We do not have the capacity for that low-level migrant worker here in the United States. Anybody who says otherwise is a fool. Now, if you think that Americans are going to take those jobs, let me tell you, it's backbreaking, it's difficult, and pays hardly anything. The reason being is that when the migrant workers are working, they are working in the field that they do. I believe the movie McFarlane explained it best, where they get paid per field that they do throughout the day.
Wow.
So going back to that, there's not even a living wage that we're talking about there. Migrants tend to have to put all their resources together in order to make a somewhat living, and with the hope that their children will do better. But let's go back to other parts of unemployment. If we look at the unemployment numbers, they didn't really change significantly. It was more or less what was anticipated. And even with what the Fed's doing right now, the big thing that's occurring is that housing prices are going up. The loans, personal business loans, are going up. Why is that happening? There's a lack. We need to concentrate on building more housing. We need to concentrate on lowering the interest rates. Not, I think the Fed has been right all along about the interest rates, but I think they could have been a little bit more aggressive when they first started this. And I think they spooked everybody. The Fed did spooked everybody by saying, we're going to stop this year. We were all hot and bothered when we said that, oh, wow, the interest rates are going down. That's great. We're going to have a party. And, it doesn't work that way. As a matter of fact, it went the opposite direction, where you had the interest rates go in the mortgage arena. The interest rates are at 7% right now when it was at 5% before. But we forgot. We were at 11% just a year ago, last August.
Wow.
So we have to remember, let's put things in perspective. If seeing interest rates going down, if the Fed regains its senses, according, to everybody out there, because it doesn't make sense to stop now. But hindsight 2020, it could make sense. The problem is the market doesn't like it. No market likes uncertainty. The second part is that it does not stimulate more growth in the economy, hence the tariffs. This is a strategy they're taking because there's not much that can be done. As you mentioned, Ted, there's not a heck of a lot that's going to come out of this. But let's see what we can do to stir the pot, and let's see what we can do to have somewhat set up for the next Republican challenge. Because that's what I see.
Do you think, Aquiles, that Trump imposing these random tariffs out of the blue, do you think part of that was his play to kind of like a cudgel on Jerome Powell?
It's funny. He has really no power over Jerome Powell. The Fed is independent. You got 12 governors who.
Well,
really
USAID used to be independent too.
Yeah, well, that's a different scenario.
Yeah.
I mean, they can cut off funding to any agency.
Given that he doesn't, I mean, exactly, the Fed is different. So since he has no actual power over Jerome Powell, maybe he figures if he can, like you said, stir the pot in the economy by tariffs, that Jerome Powell will then be forced to respond. Maybe?
It is a possibility. All right. But here, I would
he is
submit
a
this
madman, Donald Trump. So,
like, hate, or what have you, let's look at Jerome Powell. This is a gentleman who's been right more than wrong. And people do not sympathize with the losing side. They are going to sympathize with the winning side, because the winning side has kept us in this expansionist mode for more than a decade. We have not seen a real contraction in the market till this month. I was talking about this on another media last month. I said, we are going to see a rough first quarter because they haven't seen that hard of a correction. Now, with the absence of correction, whenever the correction does happen, it's infinitely worse because we haven't seen that control occurring. We need to have pauses in the market. We just saw one recently, so that was good. But we need to have pauses in the market for it to go back. It consolidates, it moves sideways, and then all of a sudden it starts grabbing it, going up. thing. That's an efficient market, guys. That's how we make more money in the United States, and that's how these big companies can offer their CEOs tons of money. So, going back to the Fed and the unemployment is controlled still at this point. The Fed interest rate, I foresee them having to do something in the latter part of this year because the Fed doesn't care what Trump says. They just don't. They're going to say, unless there's some imaginary thing that comes out and say, aliens say, you better lower rates. You better lower the rates and stuff, then, that's a different animal. But in absence of aliens, the Fed is going to do what the Fed wants. They are independent. They are 12. I mean, imagine there are conservative and liberal members of this board of governors, opinions ranging from the ridiculous to the absolute super conservative. So, and you have a governor, the head, Powell, who is not hawkish at all. As a matter of fact, he's more dovish, more soft stand on the particular matters of the day. An adult in the room, in my opinion. And there are 12 of them, and they are making ideas that at this point, they've been right a lot more than they've been wrong. The president is simply using the power of what I call moral suasion in order to sway public opinion towards, hey, maybe the Fed should be doing something. And the truth of the matter, the person who says that doesn't know what the heck they're talking about generally.
Yeah, Jerome Powell's like, whatever, I'm not listening. I don't care. So
he's drinking his smoothie.
That's true. He just really didn't care. I mean, look at when Trump came in the first time, because Jerome Powell was still there, and mortgage rates were still hovering near zero in the first Trump term, right? And people were saying Powell needs to raise the base rate. He's sitting on zero for too long. And he just kept sitting there. And he was like, don't care.
And I don't know right.
If he was right. Do you think that proved to be a good thing?
Yeah. For that particular point in time. Sometimes the best move, and I just know this as a money manager, the best move is not to take action. Sometimes it's the best because long term, and these guys aren't thinking 2 months in advance. These guys are thinking years on how things will affect the U.S. economy. I think that a lot of people, the general public, forget that the economy moves in cycles. And we've had this huge expansion tract for over a decade, and it'll have to start contracting at some point. The question is, we talk hard or soft landing. That's not the most important thing, because when it starts, it's not going to be pretty. It's going to be ugly. I've seen this with the market. Once you start seeing the economy moving in that direction, then it's all bets are off. And you're going to start seeing a lot of panicking. You're going to see a lot of businesses folding because they were not aptly prepared. That doesn't mean it's going to happen, but at some point, we're going to have to, move into that market cycle where we were all this up, and everything, and we're going to have to start going downward, and then kind of leveling off before we can go back up. All right, that's just simple market.
Yeah, I think you're right. I think we're going to see a lot of pain this first quarter. So, I mean, I don't want it to be the case, but I think you're right. And then hopefully, I don't know, once we see the pain, then what? Are we going to level out this year, or are we going to keep going down through the year?
No, we're going to keep going up. It's going to be the opposite. Yeah, we're going to go back up again. But the only kink in the armor at this particular point, and we've talked about this, is the cost of living, the food pricing right now.
Yeah.
The food pricing keeps going up and up and up, and there seems to be no leveling off at this particular point. I always give the example of the Chinese or the Korean stores with the rice, 25-pound bag, the bags of rice at 25 pounds. Now, what a lot of people don't realize, those prices move up and down all the time. So just the other day, I drove by a place and I saw at $24.99. Yet I went to another store, and the other store had it for $27.99. And then another store had it for $23.99. So there's a lot of movement. There's a lot of fluidity that's occurring in these commodity markets per se, and which has no correlation to the market, the stock market at all, and more to do with supply and demand, which is the true measure of the cost of goods at this particular point.
Yeah, very good. We're absolutely going to have you back, obviously, as the market keeps moving and shaking, and who knows, God only knows what
Quaking.
the orange man, twerking, the orange man in the White House, what he's going to do, and changes.
No
he
twerking.
flexes and,
No market twerking,
oh
please.
God. No, I had it in my head, Trump twerking, and I went, oh God.
No,
Get that out of my
I
head.
don't know how I'm
We've
going to
all
sleep
suffered
tonight
enough.
thinking about that.
Oh, I don't. Okay, sorry. We'll get that out of our
Nuts.
heads. Aquiles, appreciate you coming on and breaking all of this stuff down for us. Of course, Aquiles Larrea is the CEO and founder of Larrea Wealth Management. He is the author of the book Your Money and You, the ultimate guide for Latino entrepreneurs. But I would argue it's for all entrepreneurs.
Before I forget, I have a new book out. It's called Wise Up With Your Money. It just came out now.
Congratulations.
It's on Amazon.
Let's
It's
show
on
the link.
Apple. It's on all the things.
Let me
The
look it up.
picture you
What's
see
it called?
behind me, it's called Wise Up With Your Money. It's on Amazon. It's on Apple. It's on all the major retailers. It is more geared towards the American consumer. And we have an audiobook. We have all the wonderful stuff.
Well,
we do everything, when we come out with these books. The first one was great for the good for anybody, like you said.
Good name.
Wise Up With Your Money, right there. It's available on Amazon. You just published it, so it's fresh off the press. So go check it out right there.
Hot off the press.
Hot off the presses. Thank you, Aquiles. We'll look forward to seeing you again soon.
Thank you so much.
Thank you.
Thank you. Bye-bye.
A huge shift is taking place on planet Earth. People seem to be waking up. Tired of the way things used to be, they are creating something brand new and changing the world we live in. My name is Brad Zales, and I get to sit down with the next generation of idea makers, the disruptors, and the game changers. Everyday people, just like you and me, from all over, who are doing amazing things to Awakened Nation.
Hey, everybody. I have a good friend on the show today, Aquiles Larrea. We met many years ago, many moons ago, with Bruce Lippin and his group on Long Island in both Manhattan. And I'm just jazzed to have you on the show today, Aquiles. Welcome to Awakened Nation.
Brad, thanks for having me again. A double pleasure. I can't say enough. I'm honored to be on again, and hope we can help some people out.
Absolutely. Buckle up, my friends. Get a pen and paper, because Aquiles is going to go into all the investment strategies you should be doing. Even if you're 50-something years old, it's never too late to invest. And since 54% of baby boomers did not save for retirement, this is going to be a fun show. You can do it. But I'm going to read your bio real quick. Some of you may recognize Aquiles, and we'll talk about that later. But Aquiles is the founder and the CEO of Larrea Wealth Management, and has done so for the past 20 years and counting. Well-known TV personality, Aquiles Larrea Jr. has been advising successful individuals, executives, entrepreneurs, and their families to reach their goals and pursue the life they've always wanted but didn't know they could have. Aquiles has been featured regularly, and you've probably seen him on Mornings with Maria, with the host, Maria Bartiromo, Coast to Coast with Neil Cavuto, and many, many others. You've seen him on Fox Business, TD Ameritrade Network, Univision, the New York Times, CBS, CNBC, and many other media outlets for his investment expertise. And we're going to be talking about his latest book today, Wise Up With Your Money. And I'm excited to have you back on, my friend, because you've been doing a lot of great things. So officially, welcome to Awakened Nation.
Thank you again for having me, Brad. Pleasure, as always.
Sure. Now, I wanted to kick this off because there are several pathways to wealth. One is you can start a business, struggle like hell for years, hope that it, breaks through the $1 million a year category and grows. That's number one. Number two, you can buy a business or a franchise and create wealth from that. And you can make a lot of money with that, or you can inherit a lot of money. And then the fourth one that you're going to talk about today is you can invest wisely. So let's get started. Your new book, Wise Up. I was reading this and I was just so excited that you give a very bold statement in the beginning. It takes commitment to this. It takes a mindset. So let's talk about that.
Yeah, I mean, Brad, when we're talking about the mindset, we're really alluding to the discipline that you need to have. And coming from a martial arts background in Shotokan karate, Japanese karate, that is a perfect mindset to get yourself on the way. Now, I'm not saying everybody has to have it, but you just have to understand that that's a good beginning. And if you don't have that mindset, that's okay as well. It's just this never quit, keep going, and understand that you can get to the next level, but it's going to take time. It's not going to be overnight. It's something that you have to say to yourself almost every single day that this is what I want. This is what I want to have happen all the time. And it can never leave your mindset, because your goals, your dreams, they don't go to sleep when you do. They show up in your dreams. They show up in your subconscious, and you just want to make sure you're simply following what they tell you to do. And it's not that hard if you allow them to.
It's true. I love this quote you had in chapter 3. Chapter 3 is a great chapter, Making $1 Million. But this quote is so powerful. When I was young, I thought that money was the most important thing in life. Now that I am old, I know it is. And that quote is from Oscar Wilde. Why do you think in this day and age? Because we have so many things at our fingertips. It's not like our grandparents' era where you had to go to an investment banker or you had to go to somebody who was knowledgeable in this and not only get investment advice, you would hand them a stack of cash. But in this day and age where we're hyper connected, why are so many people hesitant to invest?
I think the fear of the unknown still prevails. And there's also this myth out there, Brad, that you can do it on your own. That is the biggest bunch of malarkey I've heard. And I'm taking this from an Irish background. I grew up in an Irish neighborhood in Woodside, Queens, New York. But that is the biggest bunch of malarkey I've ever heard. Because I want you to think your average advisor has thousands of hours beyond the normal. This is a love affair. You either love this business or you get out of it. Did you know, Brad, that 95+% of advisors fail out in their first year? And of the ones that are left, that let's just say 5% of them fail out the second year, and only 5% are making, well, actually it's closer to 1 to 2%. 1 to 2% make it past their fifth year. The fifth year. I have been doing this for 30 years now. And let me tell you, it was a love affair that was born when I was 18. And it just continued. It's never stopped with me. My clients make me better at this. They always tell me, they keep me in check, and they say, hey, Achilles, make sure that you don't forget about us now that you're on TV and all that radio. I just did 2 radio shows yesterday, but I spoke to 2 clients right after that. They keep me grounded. They keep me fresh. They keep me in the know, in the trenches. And I love that about them. So, if you don't like people, Brad, you're going to be working on average with a person for 20, 25 years on minimum. I have clients longer than that. So if you don't like people, this is not the business for you. But you can absolutely help your clients make a lot of money if they keep that discipline, if they keep that mindset, the forthright with, I can make this money long term using all the factors. You know, I have a lot of business owners. I have a lot of regular employee type clients who just have over the years have come to make more money than they thought ever possible because they save like squirrels. You know, they made this the right thing. They made it, you know, we made it about them. We made that they were going to do this, but they had to stay disciplined. They had to stay focused. And if not, they were going to have a lot of challenges and issues going forward. And I hate to say this, but most people, their discipline kind of checks out in the first 6 months. And then you got to remind them. You got to say, hey, come on back. Let's remember why we're doing this. And I remind them of their goals. I always have copious notes of what's going on, Brad. And I make sure, hey, this is what you told me you wanted. Is this still what you want?
You're making me laugh in the beginning of your answer because I kept thinking to myself, how in the heck did you get started with this? You know, were you like that Warren Buffett type who started at 6 and you said, you know, I'm going to buy my first stock. And you went out at Halloween as an investment banker, you know, just in a suit with a briefcase. But what was that transition? You said it was like 18. You decided this is what I want to do. Was it just,
No.
You said it was born of a passion, but what happened?
Absolutely not. It was born out of passion. But when I was 18, Boston Beer or Sam Adams went public. And I was working a job and I saw in the paper or some publication that they were going public. And I had saved up a little bit of money from my job. And I went and I purchased it through a cardboard advertisement on one of the cases that my friend had brought over. So I bought, and I had an account with TD Ameritrade. I went and opened one up the minute I received the shares of stock. Now, Brad, let me tell you, when I got the shares of stock, it traded on the New York Stock Exchange. Beautiful stock certificate that came in. I mean, these things are a work of art. If you've ever seen a real stock certificate, I mean, it's an amazing piece of art. And that was part of it. That was part of the allure. But more importantly to me at the time, well, you know, this is more than I've ever put any money towards. And I can't afford a house. I can't afford to do the big business things that I had in my head. So this was the one step I said, you know what, let me go and try this. Let me see how it worked out. And, you know, the stock went public, went up about $4. And let's just say it was $20 at the time, and it went up to $24. I would call in, excuse me, I would call in to the TD Ameritrade hotline where they would give you automated quotes, Brad. Automated, you know, and it would tell you, Boston Beer is at 24 1/2, you know, and I would do that 3 or 4 times a day. Thinking, oh my gosh, you know, I purchased this at $40 and I've already made $400. And at that time, Brad, that was more than half my week's paycheck. You know, we are talking about a long time, but we are talking the 90s. So it was, you know, I don't think I was making more than 21,000 at the time, you know, in a particular line of work. But that was it. That ignited the fire. That said to me, you know, this is great. I have a potential to make more money. And what happens? It went up, I believe, almost to $30, and I sold it right away. And the reason being is anytime, you know, I was reading, anytime you can get a better rate, you know, than 10 to 12% on your money in less than a year, we call that a gift from God. I'm not an overly religious person, but let me tell you, when you make that kind of money in a very short period of time, because I think it was less than 2 months, Brad, I did that and I said, wow, could you imagine if I could do that every single week? And there the mindset started forming. Now, it was years later, you know, it was probably a good 7 years later before I got into the business, 6 years later before I got into the business. I was 24 at the time. And, you know, a friend of mine suggested to me, he's like, hey, why don't you try this? You're really good with money. I was running 3 karate schools at the time, the money part, and also teaching. I was an international competitor. You know this story. Yep. And he said, you should really try this. There's an open house for one of the financial houses Dean Witter, now it's Morgan Stanley, and you should go and see if this is for you. Now, what had happened was that the South Africa, not the South, the New Zealand team. I've fought South Africans. I've fought everybody, but the New Zealand national team was coming in for a friendly tournament. I love that word, friendly.
Friendly.
There's nothing friendly about it, Brad.
Nothing friendly at all in the martial arts. Yeah.
Absolutely, absolutely. So they were coming in to fight. My teacher, who was Japanese, suggested to me, I'd love you to be there. You get some good experience fighting these guys. And they came in and they did their haka dance right in the dojo. So,
right.
you got the head shaman guy. He's sticking his tongue out at you. By the way, after the dance, after all the pleasantries are over and the tournament's over, he goes, when I stick out my tongue at you, he goes like this. When I stick out my tongue at you, it means I want to eat you.
Yeah.
And I was like, what?
Yeah.
I never heard of something like that before. But it was very impressive. And it was all part of the story why I could not get there that night to that open house. My friend, my best friend to the day, all of a sudden we're talking on the phone. He's like, I'm really disappointed in you, Achilles. I think this is for you. And I think it would be an incredible addition to your life. So
right.
I said to him, hey, I'm going to call them up right now and I'm going to get them the job. You watch me. 9 interviews later, I had the job. And the guy said to me, who's going to be my boss, he says to me, Achilles, I am hiring you not because of your college degree, not because of your work experience, not because of any of that BS, he says to me, but because you are a karate guy. And if you can translate that to some of the tedium that is this business on a daily basis, you will do very well in this business. But remember, this takes time. It could take 10 to 20 years. Right. So that was an incredible insight from him. I didn't understand it at the time. I was there thinking, Brad, I was going to do this in 5 years. I was going to do it in 10 years. But what I noticed was that the discipline of karate, the discipline of staying invested are very similar and allow you the freedom that you want in your life if you can just hang in there. But we are emotional creatures by nature. And this is why a financial advisor is so important. Think about it. When you're doing anything with a discipline, what's the first thing you want to do when it gets tough? Quit. Or you get emotional. The worst thing is you can get emotional about money. It's the worst possible thing, right? Yeah, celebrate your success when it happens. But after that's done, remember, you still have a job to do. And that's to take care of yourself. And I remind my clients of that. This is about you. This isn't about me. At the end of the day, you are the ones who are going to be living the way that you're envisioning, that you wanted it to be. So that was just a little piece of that.
I love listening to your stories because it is about this tenacity, this never give up attitude, this, go for it all. And you do get that in the martial arts. And for those of you who are listening or watching this interview, just think about your own life where, I know everybody makes fun of this, give up your $4 a day lattes. But it is that. You could save a lot of money, that extra money. For those of you who aren't making, $200,000 a year, you have to find that little bit of extra money today. And I for years I made my coffee at home and put it in a thermos. And if you have to do that because you will know that you didn't invest when you hit about 50 something years of age. You'll start to go, oh, because all your other friends are living differently than you. It is important to invest. Yeah. And I love the fact that you've been doing this 20 years. Yeah. Don't be listening to guys who are only 5 years in the pit. Talk to somebody like Achilles. 30 years. I wanted to talk about this. And this was very, very interesting. I was watching an episode of Dave Ramsey's show where he talks about investing. And his sidekick, somebody had called in, this couple, and the wife was talking about how they only put $150 away, or $150 into their 401k or retirement vehicle. Once a month, they put $150. That's it. And Dave Ramsey was like, well, how much do you make a year? Well, combined salary, they were making like 300 grand. And so they're sitting there going, wait a minute, what's wrong with this picture? Well, they both had car loans. And one of the car loans, along with insurance, was like $750 a month. And then the other car loan they had was, she was paying $550 a month, I think it was, plus insurance. And so right out the door, there's $1,500 to $2,000, including if you include gas and everything else, in their investing, because they were living high off the hog. And the first thing Dave said is, you got to get rid of one of those cars. Do you find that some people, once they start making big money, they forget the investment part and start buying the toys and the house and all this other stuff that they really don't need because they think they deserve to level up?
No, absolutely not. I find the exact opposite. The prototypical, if you look at Thomas Stanley's Millionaire Next Door, those are the type of people I run into on a regular basis. And in his book, Thomas Stanley just alluded to the fact that these people never wear a watch more than $70. They have Timexes. And we are talking quite a few years ago. But the mode or the mentality hasn't changed, Brad. What's important at this point, in the case of that particular couple, was that there's a principle called Pareto's principle, that when you make a certain amount of money and you make, let's just say it goes up $100,000 more, you take on that $100,000, whether it be debt, whether it be expenses and the like, and you feel like you're the hamster on the wheel, and you just keep going and going, and there's no end to it. Right. What I have found with the Millionaire Next Door is the exact opposite. They want to retain that blue collar background, that blue collar status. They are embarrassed to tell anybody what they have. They would never call into a show unless they're showing off to say, we have this, this, and this. No, that would embarrass them. What I have run into are people who save like squirrels. Take that couple, for instance. That same couple, if they were following Thomas Stanley's book and advice, they would have been putting anywhere between $30,000 to $60,000 away a year. Now that's only 10 to 20%, Brad. If you think about it, it's really, not a huge amount. It's an amount that is affordable in their world. Because if you think about it, right now, I guarantee where the expense went, aside from those cars, is the daily. They're out eating every single day. You talked about the coffee example. The coffee example will not make you rich. All right. Right. There's a big fallacy. And I see young guys talking about it's not the fact that it's going to make you rich. It's that once you have started doing that and putting that money away, you will grow that money exponentially through the power of compounding. So just taking that into consideration, along with the other little tidbits, the nooks and crannies that you get at when you start saving like a squirrel. I was looking today, I saw a documentary. There was a woodpecker, and he's putting nuts into the tree. A lot of people don't realize why a woodpecker digs into the tree. They put nuts in there for the winter. And when the winter comes, they go and they grab the nuts and they eat them. You're retiring. You need to think of that like your retirement, if you think about it, right? So you're the retirement has come. And by the way, retirement shouldn't be the end event for you. Right. It should simply be, hey, I've reached an age where I don't need to kill myself like I used to if I was an entrepreneur or an employee. I don't need to even be full-time anymore, or I am done. I have reached a point where I am fed up with this particular lifestyle. I have saved enough to get me to the next level lifestyle, and I'm going to take advantage of that fact and have more time with my loved ones, my people who I cherish, my passion plays. No, it could be golf. It could be hanging out. It could be, hey, I'm going to go get a beer today or something like that.
Right.
Brad, I'll tell you, I have a passion. I like going. You and I are both musicians. This is why we have so much in common, right? Tonight, I'm going out and I'm going to go to an open mic and sing. I've been doing it for over a year now. I've been singing for a couple of years. And, in addition to playing the drums for over 30 plus years, but, the singing I've been doing for the last 3 years now, and singing in front of an audience that I have never met in my life is exciting, exhilarating, and every once in a while I do okay, and people say, "Hey, thanks, for doing those songs," because we don't do songs that everybody does, So
Right.
it's just an excitement. I hope your retirement lifestyle is just like that. That you're able to pursue those passions, to make your life exciting for you and your spouse. Go on that trip. Go do what you had envisioned when you were in your 20s. And now that you have the resources to, why aren't you doing it? What are you waiting for? It's kind of like when you go to those buffet places, and you don't want everybody to know you're eating a certain amount of, things. So you grab a little bit, but you end up coming back 6 times. It's
Right.
crazy. No, grab it, pile it on, just do it right away. Retirement should be smart like you were when you were younger, but carry the discipline into your retirement and let yourself let go every once in a while, because it's important. If not, you will make big mistakes with your money.
Wow. You said a mouthful, my friend. That is phenomenal. One of my favorite quotes is from Les Brown, the motivational speaker, Les Brown. And he said, "The easiest thing I ever did was make $1 million." And he stood on stage and he added up everybody in the stadium that he was speaking in and how much they had spent. And then he said, I get 50% of the door, blah, blah, blah. And so you added it up and he made way more than $1 million that day. And then he ended that whole thing with, and he looked right at everybody, he looks around the arena and he goes, "The hardest thing I ever had to do, though, was believe I could make $1 million." And I think that's incredibly powerful in this day and age, because there are people who have that discipline, but they don't really maybe see themselves as becoming a millionaire. Like you said, some of them are even embarrassed that they have this kind of money and would never want to flaunt it or talk about it. I grew up around farmers, who basically, they didn't talk about their money. I myself took a company public and I lived really, really simply because, why do I need a 7-layer cake? What three will do? I'm fine with a 3-bedroom house. 2 of those are one is a studio for me and one is a studio for my fiance. So I have to ask you, your clients come to you already, with that mindset, but what do you do with the client that comes to you that, maybe doesn't have that mindset? Do you massage that a little bit and help them, transition to, hey, you can do this?
To paraphrase a movie and not go into the cultural things, but every investor wants to be a millionaire.
Mm-hmm.
They just don't know it yet, right? So I'm the guy, it's actually the opposite, Brad. Most people come to me, they don't have that mindset. They have the millionaire next door mindset. But when it comes to investing, someone has told them that they can get rich quick. Someone has told them that they can do it themselves. Someone has said to them that this is easy, to which I, as you said, I massage a little bit. And I cajole them and I tell them it's not. That's why you need me. Because if you didn't, I wouldn't have a job. AI was supposed to take me out 30 years ago. I was being told AI, artificial intelligence, you're going to be knocking, on the doors looking for a new job soon. And I can't tell you, I can tell you just from experience, I've never been in more demand now than I have now.
Yeah.
So, and that's really because I speak very plain. I don't believe in gobbledygook jargonese. right? If someone wanted to go learn a language, they would go grab a Rosetta Stone or one of those Babbel apps, and you do that. When they come to me, I will accept them as a client when they have said to me, I need your help.
Yeah.
I am open to what you're telling me. I need your help says to me that you are open to the possibilities, that you are not going to go in a different direction, that we are on the same page. The question becomes, is it reality that you're looking at for your future, or is it a fantasy that you've conjured up? And I've run into a few situations where it was a fantasy, and those people don't last. The reason being is that they have created this multiverse, to quote Marvel, this multiverse in their minds where they're someone who they're absolutely not. They're not that person. And they think they are, and it never changes. Doesn't matter if they started with me when they were trying. I have people whose kids were not born when I started the practice, and now they're graduating from college. Let me tell you, it is one of the most amazing things to say to a client, I am so proud of you that you put all this money away to help them get through college. You're going to probably end up buying them a house, with what you've done. And you've been smart, you've been strategic. And I was just happy to be a part of it. And that gives me pride beyond the belief, Brad.
I agree with you on that one. And we'll talk about that because you do talk about that in the book, the ability to give back, the ability to help people. But you keep referencing this book, and I read this years ago. I loved this book, The Millionaire Next Door, The Surprising Secrets of America's Wealthy by Thomas Stanley, and William Danko as well. He's a co-author. I just found that book fascinating because we all have the myth, as you said, the illusion in our head of what a millionaire looks like. And I don't have that illusion simply because I grew up around farmers who had $4 million in the bank in cash. So, you meet a pig farmer and you have an attitude that, who is this guy? Meanwhile, they're also driving around in a 1958 Ford pickup truck still. And this is hard for you, I would imagine, to break that myth inside people's head. You just talked about it a little bit, but let's shift gears to the next generation and their belief in wealth. What do you find very different between, let's say, the baby boomer mindset and the millennial mindset?
Yeah, and I can't take my generation. Let's actually go beyond. Let's take Gen Z.
Okay.
I was born in '69. So I'm 54 years old. Gen X is my generation. We're kind of the go-between between these generations. Yes. What I see with the younger generation, it's not that they are not disciplined. As a matter of fact, they are just as disciplined. But what they're not going to do is they're not going to wait around for this to happen. And this is exactly the opposite that needs to occur when you're investing. I've seen it with real estate. I see, I'm pretty well-rounded when it comes to the different disciplines of money. And what I see works and what I see doesn't work is many different things. So what I see in the younger generation is that they want to do it yesterday, but it takes time. I mean, Brad, when you were building your company, you didn't build that company overnight to go public. You were thinking, hey, I'm just going to get to this point. And then you got to that point and someone approached you and said, hey, let's take you public. Let's see if we can do this even bigger and better than what you started. Yeah. But it wasn't your original intention, right?
No, I didn't even know what an IPO was. I mean, I like I said, I'm from a small town. My CEO educated us, and we had session after session for 6 months before we went public with Arthur Anderson to train me on how to speak to the market, speak to Main Street and Wall Street, how to look at a business opportunity. I mean, that took, I know I had a crash course in 6 months, but some people, it's a lifetime of learning.
There was an interesting quote from Charlie Munger, who recently passed away from him and Warren Buffett founded Berkshire Hathaway, and he was basically the second in command. He goes, the first 100,000 is the easiest to make. So it was similar to Les Brown was saying. First 100,000 is the easiest. He goes, then getting to the million. I'm sorry, let me go back. The first 100,000 is the hardest to make, but everything after that snowballs, and then you become much more wealthy in a shorter time span. What this next generation, the subsequent generations need to remember is to get to that point, whether it be 100,000, whether it be now 250,000, whatever that point needs to be. Once you get to a fixed point where you have said, okay, I wouldn't mind having that, but what would my life look like if I got to the 500,000? And then reset the mind, reset your goals. What would it look like at the million? Because $1 million isn't a lot anymore, in some people's minds. So you need to mindset your way to, what if I had 10 million? And that's really, the point for the most aggressive people I see out there in terms of saving like crazy, investing like crazy, and doing whatever it takes to get to that point. Not everybody has that mindset, Brad. Not everybody's going to be able to do that. As a matter of fact, in terms of entrepreneurs, only 10% or less ever reach those high goals.
Right.
But there are some people who replace their job with a business. It's just a higher paying job, and the financial freedom and the freedom from corporations and the like, who are perfectly happy with $1 million, who are perfectly happy with 500 grand. And what the younger generation is going to realize is they're going to get to a point where, how much is enough? How much do I really need? And once I've reached that point, what is my quality of life? I've known people who were making 20 million a year. They were bloody miserable. I mean, they were just unbelievably miserable. I knew this guy who was drop shipping, doing a whole bunch of things with Amazon, and he hated it. So he ended up selling the business, ended up going into something completely different, and now he's enjoying life. He works part-time, yeah, but he doesn't have to. He made a lot of money from selling the business. I think he got 2 times earnings. So, he took that, didn't really live a ridiculous lifestyle, and is now enjoying life, traveling around and seeing what life really is about. And I think that's important.
I think this is just leading up to taking the money you have, living a simpler life, and really planning for financial freedom, or at least some breathing room for some people. And you're never too late to start. What are the top 5 things that you suggest to not only your clients, but the people listening on this show? What do you recommend that they do to get started and make this a sustainable part of their daily lives, almost like unconscious competency?
Yeah, absolutely. If you can, first thing is to come up with a plan with yourself, your spouse, and a financial person. Now, I'm not talking about who someone started in the business yesterday. To the bare minimum time you want to be working with someone, they got to have 10 years in the business. They have seen 3 to 5 bad markets by that point. All right. We call them market cycles. They occur every 5 years. All right. But in 10 years, there's bound to be a bad point in the market. And you didn't get emotional. So, that's one thing. Second thing, every savings that you're planning on putting away must have purpose to serve you. The Richest Man in Babylon is a book that tells you about, I'm going to make that money my slave, and it's going to work for me every single day. It's unemotional. So even before you do that, make that money your slave, put that money into something that is going to give you interest, give you a return on investment, give you equity. So that's number 2. Number 3, working with an advisor. that's competent, but working with someone who understands your goals and dreams. All right. Number 4, make sure that you keep the discipline. The discipline is very simple if you understand it, but it gets really difficult when the bad times come. Inevitably, you will have bad times.
Yes.
You need someone there in your corner, like a good advisor or a good friend, to say, hey, this ain't going to last forever. So hang in there because you're going to get past this. That old saying, it too will soon pass. You can't say it any better than that.
Right.
And the last thing is, once you've reached the mark that you have been longing to achieve and really just able to take a little bit of a breather, enjoy it. Because you know, there are a lot of people who they work 30 years at a company, 50 years at a company. You know, one of the saddest experiences I had as an advisor was I had a client who worked with this big telecommunications company, and she decided to finally retire, and she asked for my help. We're helping her out. I don't even think it was 6 weeks afterward, she died. She passed away. She was working like a dog for that company, and that company didn't appreciate her at all. But that's just the way it happened. I think that's one of the saddest things that can happen. She did not have family, unfortunately. Brad, do you know where the money went to?
What?
The pension plan went back to the company pension, because there's a provision in there for that. She died without a will. So New York State is probably going to be the biggest beneficiary of that, because no one is there to contest the will. It is the saddest thing I seen. She had quite a bit of money, you know, but what I thought was just even worse was that, you know, during that time, it was almost a month before they found it.
Wow.
It's terrible. Terrible. Do not let your life go by. Be of the mindset that, as important as it is to make that money, it's just as important to start living even before you retire. Make sure you get some things accomplished that you wanted to. Take that big trip once every few years. Buy that car if your money is available. Make sure you go buy that car, even if it's just once. It doesn't matter. You could give that car back next year. You could sell it. It doesn't matter. But the fact is that you did it. Or even more importantly, spend the time with your loved ones, because that is experience. You know, Starbucks, even in this day and age, still has lines going out the door.
Yes.
Do you know, when I go to the Starbucks, they know exactly how I want my coffee. I order it through the app, but the people there know that I like it a certain way, you know, and it's done almost the same way every single time. That's why there's a line out of the door in most Starbucks. Whether I'm here or whether I was just in Miami, they made it the same way. And I'm not just, you know, quoting one company. There are a lot of successful companies that have repeatable, memorable experiences. If you can create that repeatable, memorable experience for yourself, you will create unbelievable happiness in your life. And I really hope you do.
What you're really talking about is being a CEO of your own life. You know, if you're hearing this or watching or reading this, you really have to get it together as an adult. You need to have a will. You need to ask yourself, why am I working? Is it to pay bills? If a company doesn't appreciate you, get out of there. Go to a place that does appreciate you and have a little fun with your money. Like I said, why are you working? You know, why are you working? Are you working just to pay bills, or do you want to sit back one day and live in a nice home? Or do you want to buy a series of buildings, maybe? Or, you know, maybe just want to go on that dream vacation where for 3 months you go all over Europe. Think about it. You know, think about what is your dream? write down your practical dreams, but also write down the pie in the sky. Maybe this would happen. I would love it, and go for it. And reach out to Achilles because he's someone you can trust when it comes to advising. I do have a really powerful question that I think everybody wants to know, and that is, how do you know you've hired a bad investment advisor?
It's real simple. You don't get along with them. All right. I tell people right at the front, I go, we have to get along and like each other. And it's a two-way street. I will fire you as a client if I don't like you, or you have, things that you say to me that are not congruent to what I believe in. Our belief systems have to be somewhat aligned. So, you as a client, you have to say to yourself, can I picture myself with this guy for the next 30 years? Because we're going to be together a long time. And you have to say to yourself, another thing is he really doing what's in my best interest? As a fiduciary, you have to do what's in the client's best interest. I was a fiduciary way before anybody was calling it what it is today. I want to say probably a good 10 years before that word even came into vogue. But it's just a fancy way of saying, hey, are we on the same page? But your dreams, your goals are first, right? I'm going to get to wherever I'm going to get when the time is right. But you are my priority, right? You are the person who makes all this possible. My clients challenge me to be better. My clients want me to get them to a certain point, but then to have ideas that are outside of the box that they haven't thought about. And that's part of what I do as well. Seeing what might be an issue before it becomes an issue. All right. If your advisor can't do that or give you ideas that don't sound like everybody else, then keep looking. I wouldn't say to go and interview 3 guys. No, you probably have to interview one person to know what you like and what you don't. Right. The second person that you talk to, though, even before you have that sit down, you should ask some questions. But be careful, because right now, we are now in a world where there aren't as many qualified advisors as there should be, because the big corporations want you to either work on a team or they want you to do things that are in their best interest. Brad, you can't, I think I've said this before on your show, you cannot serve 2 masters, right? As far as I'm concerned, your client is the number one priority. And if you forget that as an advisor, it comes through when you talk to them. It comes through. If you don't believe it, you're kidding yourself as an advisor. As a client, you can see right through advisors who are only looking out for themselves. You go to the bank, for argument's sake, and I don't want to disparage large institutions, but you go to one place and all they have is one investment for you or 2 investments. Why?
Yeah.
Because it's in their best interest. Because it's not risky. Because it's not in their best interest to be a fiduciary per se. So what do? They recommend things that sound somewhat safe, but are not in your best interest. Right. So going back to your question, talk to a few people. But even before you talk to them, have an idea of what the perfect relationship would look like, and then ratchet it down a little bit from there, because you should be able to have a good conversation. I know when I have a good client, and they know when they have a good advisor. One person said to me right off the bat, you don't say what I want to hear. You say the things that are real. And sometimes I may not agree with you. And sometimes it pisses me off that we did this. And sometimes it's not a perfect world, but I'd rather have that person telling me the real deal versus someone who just tells me what I want to hear kisses my butt, does all the things that he or she thinks that is the right way, and those people are a dime a dozen. People who worked with me over the years know what the difference is.
Wise up with your money with Aquiles Larrea. Thank you, my friend, for being on Awakened Nation. I really appreciate this, Aquiles.
Thank you, Brad. Always a pleasure and always an honor.
I have one last question for you before I let you
go.
You talk in the book about how money can make you happy. Well, let's talk about that.
Money can make you happy to a certain point. I believe I said that just as an attention grabber, but money gives you the freedom of choice. The choice of whether you're going to go out and enjoy life on your terms, or if you're going to be a slave to just keeping making money, and it wasn't in your best interest, and it gets boring, or if it can get frustrating and the like. So money can make you happy in a sense, but it cannot. You have to remember, it's a tool, and you must use it wisely. Wise up with that money, Brad. Wise up.
Aquiles, thank you so much. This book is extraordinary, and I recommend everybody go out and get a copy of it. It's on Amazon, am I correct? And do we go to your website?
It's going to be Amazon, Barnes and Nobles, Apple Books, you name it. It's going to be out there. We are the anti-establishment when it comes to the information we share with people, because a lot of companies just don't know, or they don't want to tell you, hey, I'm going to tell you like it is, whether you're going to make $1 million or not. And it really depends on you. It's not on anybody else. But I can help you get there, and good people can help you get there.
Reach out to Aquiles, my friends. Go to larreawealth.com. Is that correct?
That's right.
Go to larreawealth.com and get to create a relationship with Aquiles, because he's not only a good friend of mine, but he cares. He really pushes hard for his clients, and the most honest guy in the world, man. He'll tell you, don't invest in that.
We also have a podcast coming. It's going to be called Wise Up Podcast, coming out soon. And we're also, in addition to the book, we are going to have probably a wiseupshow.com to purchase the book through there.
Excellent. Good. Once again, ladies and gentlemen, thank you, Aquiles, for being on Awakened Nation, my friend.
Thank you, Brad. A pleasure as always. Can't wait to come back for the next book.
Absolutely. Hey, everybody, don't forget to tune in each week on a Tuesday is when we launch the show. And until then, bye-bye for now.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Aquiles Larrea is with us, founder, CEO at Larrea Wealth Management. Glad to see you both on this Friday. So, Aquiles, first up on your list is Microsoft, and it's been a very choppy trade this morning. Throughout this week, we've seen the EU exploring the antitrust probe into Microsoft, its OpenAI partnership, its bundling of Teams, for example. And this could really cost them 10% of global worldwide revenue. And so, but today we've heard more about the pairing of the OpenAI partnership. And so with that, this choppy trade. Tell me your thoughts on Microsoft today.
Yeah, the thing you have to put aside, lawsuits aside, you can't control that. Right now, the company is in a leadership position, I believe. As far as the trade is concerned, there's an opportunity here, Nicole, to get in and out of this stock multiple times. In other words, you could be making anywhere between 3 to 10 points on this stock for a very short period of time, less than a month, and you could make multiple moves to the upside. you have to remember that in spite of everything, they are still one of the dominators in the AI sector, more than a lot of companies out there. They're going to continue to maintain that leadership, barring any major fault or like you mentioned, the Justice Department. But at the same time, we fully believe that they're doing the right thing and that the stock will continue to move towards the upside, and that we'll continue to see a movement as far as 10 to 12 points on it in an 18-month time period. We also believe that there's a chance for you not only to go in multiple times in that 18-month period, but to make significant money. You know, the whole sector is getting beat up right now. Can you imagine? Beat up in definition is 30% instead of 15%. We're thinking 15%, you know, at the high end. But can you imagine a sector that was just making their, 30% or higher, going and paring back? I'll take that all year long.
Yeah.
Makes a lot of sense.
Look, if you put $1,000 into Microsoft 5 years ago, it would be $3,300 today. There's certainly been choppy action over the last 5 years, but in the long run, a winner. And so when you're saying it moves up 8 to 10% in 18 months, it's not too far off its highs. And let's get to Ben Lichtenstein, who's taking a look here at the charts. Ben, some of your thoughts on the chart.
Yeah, good morning, guys. Nicole, short-term, mid-term, and long-term winner here. Bullish pattern across multiple time frames here, supportive of the fundamentals that Achilles just laid out there. Let's break it down. I wanted to start with just the price activity we've seen off the lows from the end of last week. Stock was trading, if you remember, down around that 443, 44, 444 level, and you can see a very well-defined trajectory to the upside this week, all the way up to 456. And again, just easily identifiable, bottom left, top right. But I wanted to show you a similar fashion in terms of what's going on here as we take a look and step away from that 5-minute candle chart into the 30. Again, bottom left, top right. So from the week that was to the month of June, and the rally that we've seen, a 60-minute candle chart shows a high conviction trade here. We see 4 really well-defined areas of consolidation where the markets pause and then kind of continue along that trajectory to the upside. Actually, looks like we're starting to balance out a bit here right now. So I think you could just go ahead and around this 450, 455 area, start to look for something a little bit more consolidative rather than the high conviction move up that we saw in to the beginning of the week, middle of the week here, and that rally again up to that 456 level. We've kind of tapered off a little bit since, but that's a win for the bulls in many ways, right? Holding this upper level, acceptance, and when you take a step back and look at this longer term trend up, I mean, talk about a win for the bulls here. Microsoft in a well-defined trend up off the lows from last fall, down around 310 this week to above 456 again, briefly. We're seeking value higher in a vertical phase, so that means that basically we're seeing high conviction as we break out of this range that was established around 410. Take a step back. Look at this. 330. I love when this happens. 370. 410. So it just kind of feeds into the idea that, again, as we were just talking about, maybe something around that 450, 455. It looks like about every $40 Microsoft has found comfort and kind of gone a bit sideways, sort of consolidated. But this is a very well-defined, again, trend higher right now. And it doesn't look like we're rejecting this upper level as of yet. In fact, it looks like we're seeking value higher here, Nicole.
Yeah, it certainly looks like a good chart there overall with a lot of up arrows and the trend that's upward. Let's get to another name here, and that is Roku. Actually, Wedbush noting that it's on the path to profitability and reiterating it's outperformed. They have a $75 target on that. I think Kathy Wood had been stepping in and actually buying some of it as well. Some of your thoughts on this name, which actually has really been hovering around lows.
Yeah, this stock has been beaten up, no doubt. The whole sector has been beaten up, no doubt. There's been increased competition with Apple, with the other providers, Disney and the like. But the thing you have to remember about Roku, they're not really in direct competition with those particular companies. They're their own entity looking for strategic acquisitions. They are a leader still in the content acquisition space. There's also, like you mentioned, the stock has been beaten up at this point, so hence the opportunity. We think that this could easily go up in a more than 10% in a 12-month time frame. Now, I say this looking back at the history, how much this stock has gone up, the entire sector as being beaten up. We could see this be a contrarian in the sector and start to move towards the upside in a very short time period. And we also think, as far as revenues, as far as consolidation in the industry, it's going to be a winner. It's just going to take some time. You're going to have to be patient. So you're going to have to sit on this one. It's not going to be an in and out trade, Nicole.
Look, ARK did acquire 7.3 million worth of shares of this company in the last few days. Some of your thoughts here, Ben, on the chart.
Well, this is a stock, when you look at the longer-term charts, somewhat dismal, trying to recover here a bit. So let's start again in a very similar fashion as we did with our last example with Microsoft, and kind of begin with a more granular look at price activity and then sort of work our way up and see where we are and where some of this rally that we're looking at here puts us on the bigger picture. I just wanted to start off with a 5-minute candle chart and the move up that we've seen this week. It is very bullish, to say the least. Roku has been and continues to be exhibiting some conviction higher. And actually, when I got this name earlier, Achilles, we were in a vertical phase breaking out of this range around 57. So seeking value higher. And I think what we can do is just take a look. Let's update this chart, because I think that we're in the process of establishing this new area of value higher, right at 60. So again, exactly what the bulls have been looking for this week. They started to balance out around 57. Thursday, today, again, high conviction move up, and it looks like we're just continuing the staircase type pattern. So bottom left, top right, I mean, there's a few different ways of describing it, but it does look like the longs are being rewarded here. Now, this move that we're looking at actually started off, if you can remember, about a week or so ago, Friday. 51 is where we bottomed out here. The rally up that we're seeing, again, just sort of adding momentum to that into this week, and you can see a well-defined kind of V-bottom type pattern here, or at the very least trying to establish a bit of a bottom here, but kind of a mess, right? This doesn't really communicate trend one way or the other. Tough to say we're top left, bottom right, or bottom left, top right in this instance. It's just, again, difficult. So when in doubt, zoom out, I always say, and that's when things become clear, but not necessarily better, right? I guess the best way of putting it. We do have a pretty well-defined double top up on the left side of your screen. Over here, let me just kind of squeeze in so we can establish. And then off that, we've been trending lower, up around 490 is when we established that level. In balance, around 80, going all the way back to the summer of 2022. So we're near the lower extreme of that range, but in a low conviction trade. There's a good possibility here, Nicole, that we have some room to run, so to say, because, again, still, kind of within this range here, there could be some upside momentum. But until we take out 130, I mean, we're still in a trend lower here on this longer-term chart.
I mean, that chart is, it's just brutal. Yes. You know, there was a time that it was so exciting. You know, Roku was it, right? Yeah. That double top really telling. Thank you for that, Ben. And do you have a quick final thought? I want to get to Raytheon.
Yeah, I think you have to think of Roku as they're a dominator in their sector, but at the same time, you have to think of them, they're a growth stock. There's a lot of opportunity to make money here. But as Ben said, we're going to see a lot of near-term volatility. It is a turnaround target for us, and we hope that that's going to turn around in the next 12 months.
Yeah. Wells Fargo today put a 139 from 141 target on Raytheon, so they did lower it a few bucks. They still maintain their overweight rating on this name, but it has been a winner year to date, up nearly 20%. Where do you think it's headed? It's off its highs, recent highs.
Yeah, I still think that Raytheon is one of those stocks. You know, right now it's in a tough consolidation move. Simply, you'll see Boeing. It's death by association with all these other stocks. The entire sector is under pressure right now. But even though they're going up, we feel there's a lot more room for them to run, that they could make another 10 points within that 18-month time period. But you're going to have to be patient. You're going to have to sit on it a little while. If you see any quick moves to the downside, to accumulate and be smart and strategic in that sense, because this isn't going to be an overnight story for you.
Yeah, understood. Okay, so you got to have a little patience on this too. And, you know, the administration could have a gearing on this one way or another, depending on, I don't know, right? Biden, Trump, we'll see how that fits in to aerospace and defense as well. Ben, take a look at the charts, please.
Yeah, a little short-term weakness, has that bigger picture a little bit cloudy right now, but I'm going to side with Achilles on this one and give the benefit of the doubt to the bulls. I'll show you why in just a second. Let's start off first and foremost with the two phases of price development. This is a prime example right here. As I look at RTX, you've got sideways consolidation up around 107, high conviction trade lower. Look at this, red candles galore, and then again, balance switch form. This is exactly what we always talk about, right? The two phases, the transition from one into the next, and you can see after selling off, again, we're looking at some of the price activity we saw in the beginning of this week. We've been balancing. No rejection of this lower level right now, accepting price around 101. Take a step back with me. As you can see, again, a bit of a bearish pattern playing out, not only here and recent, but also as you take a look, we're going all the way back to the highs that we saw up around 108. If you remember, that was back at the end of May, beginning of June, and three really well-defined areas of consolidation that continue to form at lower and lower levels. So again, a bit of a bumpy road here, short and intermediate time, and that's why as you take a look at this longer term time frame, you can see the bulls are not happy to see what's playing out here because that breach of 102 is definitely raising some concerns. If you sort of look at these two areas of balance as separate areas, which I do, 104, 102, 106. But I think the real bearish narrative here is if we start to kind of continue lower, right? Because taking out 102 is significant, but we really haven't opened up the door to the downside here. It was just hanging out at that level, right around 100, 150. So I thought about, again, well, what happens if we just sort of establish this as one larger area balance? And then if you take a step back and kind of look at it through that lens, 100 being the lower extreme here, you can kind of see how we're testing that right now. But yeah, we could be still in this well-defined trend up off that fall low from last year, around $70 to above 108 this month. If you remember, bulls want to see it back above 104 though in this scenario, in this instance. Now, if they do get that best case scenario, hopefully open up a door for a retest that 108, 110 level. So a couple different ways of looking at this short-term weakness. But again, I think this is the rosiest kind of picture type scenario playing out here, and that is that this 100 level holds here right now, and that the bulls remain in charge. Nicole.
Yeah, and we got to get back to that 104
yes,
to really have a little more telling, and above, to get a more telling picture. Achilles, just a final quick thought, because, in my reading, I've seen that there's going to be, I think it was maybe Piper that talked about a 10% pullback. There was another analyst talking even about a 30% pullback. How bullish are you? Are you absolutely bullish over the next 6 months, few years, or do you feel this nervousness?
Well, there's always nervousness, but we are super bullish. Sometimes we glow in the dark how bullish we are. But to be more realistic, the numbers as far as the market is concerned, look at the Fed inflation number that just came out, in line with expectation, actually realistic numbers. We're seeing that the market as a whole is moving into the direction that we thought it would be, and that markers are showing us now that it's a slow, steady pace towards the upside. We will have regression to the mean, but at the same time, we should see a slow and steady move on that upside and movement in the positive directions. Hold on for the bumpy ride.
All right. Glow in the dark bullish. I like that. Aquiles Larrea of Larrea Wealth Management. Thank you for being here today for the Big Three. And of course, thank you to Ben Lichtenstein on our charts every day for Big Three.